Are we back? We back. Not one, but two live streams, eh? How are you doing, everyone? Hopefully your Sunday so far so good. Nice move to the downside. Rejection at the target box, accompanied with bearish CVD divergences as price moves to the downside. What to say? Press 1 if you are in the setups channel. Lol. Come on, there must have been someone that was prepared. Like, please. I literally wrote everything down. Dasek. Very nice. What's up, John? What's up? So, just FYI setups, guys. Rejection at the target box. No. The first bearish CVD was here on the 3-minute time frame. But as price moved down, it created more bearish CVDs, and now we're here, close to taking the low. Not bad. A nuclear power plant is on fire. Oh shit. Oh boy. Okay. In this live stream, what we're gonna do is analysis on Bitcoin, local range, completely fresh. So I'm gonna start over. I will not remove all of the stuff I have here, but we're gonna start with an empty slate, so to speak. Okay, let's cut out the music, start counting. So welcome everyone. It's gonna be more of a chill, relaxed stream compared to the usual, and you know, I'll be counting a lot in this particular live stream, while at the same time, while counting, also talking to you guys. So it's gonna be a mix of both, instead of hardcore focus on counting and then only doing chatting Q&A after. It's gonna be a bit of a mix of two, I suppose. Now. That is what's gonna happen. But yo, Mr. Brownbag, Jeroen, ja, 2 keer, man. How you doing, yo? M13, wow, that's been a while, yo. M1304, classic. This guy always replied to all of the YouTube videos. He is from the Middle East. Always commented in Arabic language. And I always replied, with the help of Google Translate, obviously, in Arabic language as well. Nice to see you here, man. Carla, good to have you. Okan, Mr. Brownbuck, close my paper trading short, as I suppose, you know, if your target is hit, manage it well. Yeah, good job. Enjoy the profit. Seriga, what's up? Georgian, surprise stream. Yeah, I suppose. Usually I don't really go live in the evenings. It's also weekend, so it's my content is a bit more random nowadays in the weekend compared to during the week, right? That's standard. But weekends I do other stuff and chill with the wife and whatnot. But she is working on her business in the living room, and I wanted to count the chart on the daily, this range, and then just go a little bit more in detail in the process and what I see and how it works. Shark Trends, Big Schnitzel, Pierre, welcome, good to have you here. Rohit, Botch, Dasek, yeah, a solid move to the downside, but nice bearish CVDs accompanying the move down as well. SK, Dasek, number 1, Seriga 1, yeah. Nice. Also nice, Dasek, that it works again, that you can ride here. John, what's up? Good to have you here, man. How are you doing? John, do you have any higher time frame counts yourself? Shem, how are you doing? Nuclear power plant, Trading Queen, Ion Crypto, where extended 1. Yeah, let's. I mean, you mean from 53K? Yeah, we can discuss that as well. Yeah. Yuri Costa, what's up? Best Patrick, thanks, man. What a way to start the stream. Appreciate it, man. In Ukraine, there's still a lot happening, in Russia, Ukraine. Brahim, welcome. Tom, what's up? How you doing, Tom? Hope you're doing well, and take care as well. Tyrone, wave B2C. B2C. C, of course, has to be a 5-wave structure. In that case, you're looking for a zigzag ABC, right? Your wave C in that case has to be 1, 2, 3, 4, 5. 4 is a bit big though, but we're gonna zoom out first. Ben, what's up? Sounds like a good time for a fresh new count on Sunday. Bonne soirée. That's what we're gonna do. That's what we're gonna do. Hello from Bulgaria. Hello from France. Nice to see you. Riding the wave down. That's what we'd like to hear. John S. Cheers, Tom. Bettina. How are you doing, Bettina? In Poland. Iker, buenas tardes. What's up, man? Tommy, the way you're explaining is very good. Thank you for your work. Always a pleasure, Tom. Always a pleasure. So we're about to take the low. Earlier today, we were talking about the weekend range, the 2 areas of resistance, this one here and the daily naked point of control. And nice reaction at resistance. It is exactly what we like to see. And then as price rejects, that is when we saw more local bearish CVD divergences. And as explained in the video, the bigger bearish CVD is not interesting because it's a 4th time. You had bearish CVDs here, and you had them here, and you had them again, and like it played out. But then you come back up, reject here. Not interesting, the bearish CVDs. You move up all the time with bullish CVDs. But then here you start to change some structure and you have bearish CVD divergences with every little bounce. Interesting. Very, very interesting. But what we're going to do in this live stream is count the local range from scratch. Of course, we have the previous ideas in our mind. It's not like we start from absolute zero because, of course, we have an idea from previous analysis that we have done. Make sure to check out previous content if you want to know the daily time frame counts. But I felt like more of a chilling stream and counting this section over. So, doing, sharing some thoughts and ideas, and maybe we'll find something new. Sometimes it's good to just have a fresh approach instead of opening your folder with a scenario that you have. It can be very helpful to just redo the analysis, redo the process, redo the thinking. You might figure something out. Last down before going wave 4. Wave 4. Boss is on. Solid Fab, what's up? RVP Gaming, welcome as well. Very good. That's nice to hear. Nice to hear. 1-to-1. From the 5th of August, that must be the low. 535. Current pattern 3. I mean, yes, you can count this as a 535 zigzag. Yes, that is a possibility. Of course, you can always still have a diagonal here. Eh? That's not out of the question. ABC up, ABC down. Order block on the weekly, 55K. ABC up, ABC down. But it's too early to call. But yeah, let's start. Right? Let's start on the daily time frame and redo the analysis. That is what we're gonna do. So hopefully you learn something in the meantime as well. All right. Okay. So I am of course interested in this range in particular, right? Because on the weekly time frame, I mean we can start on the weekly, I suppose. So we want to start on the weekly. Are we going to start on the weekly or the daily? A WXYXZ is very rare. It's never really preferred unless everything fails. The daily, yeah. Yeah. I think, by doing the daily, we're also doing the weekly, right? Because if we count this move correctively as a higher probability corrective structure, probabilities are higher to take the high, which on a weekly time frame translates into bull market. No, so yeah. If we protect the low, that is true. And that's also the question. So yeah, let's start, right? Let's start with the analysis. Now, of course, I already have a lot of information and knowledge in my head, so it saves me a little bit of time. But let's start counting this range, right? Because as you can see, we've been here for many months now. Right? It started in March, and here we are in August. So already for half a year, we have been going sideways. Now, of course, sideways, quote unquote, because obviously we had big moves as prices moving sideways, right? Lower highs, lower lows. Of course, the people that trade trend lines, probably happy days. I don't know, probably they take the trend line from here, I can imagine. And then this is, I suppose, what trend line traders are looking at. Right, so yeah, it's interesting. Third time rejection, big move to the downside. Trendline traders be happy. Yo, Caleb, how you doing, man? I feel like Caleb is like a neighbor now. So Caleb Castro Cabrera, did I say that correctly, Caleb? I was go-karting with Caleb recently in here. And he lives nearby, like two or three, I think 3 tram stops, 2.5 kilometers. Man, I feel like we're neighbors. I feel like we're neighbors, man. Also, nice move on saying, hey, going below, what was it that you said? Below 60 or 59? And Caleb said, yeah, I think we're going to take the low. Hopefully, you did well there yourself as well. With bearish CVDs in Confluence as well. Samuel, welcome. Samson, Y United. Oh, okay. What's up, Patrick? Why are you live this late? I just want to reanalyze the chart, have some time. My wife is working on her own business, so I just wanted to chill with you guys while she is doing her thing. I wanted to do my thing. Okay, so I'm going to put 2 things on the chart that are always important. That's number 1. I usually don't do this, but I will do it for the stream. Usually I just do this by myself. Also, generally, of course, I analyze off stream and then present in videos and on stream. But what I do here, I think, is a great exercise, right? So, and again, this is more of a chill live stream, just hanging out. If you're chilling and you don't have a lot to do, feel free to stick around. So, and hopefully you learn a thing or two. So what I recommend to do is, if you're not like, if you're starting to use Elliott Waves, right? You're not like yet on the expert level or very, very experienced. Save these 2 boxes in your folders, right? So make a group, combine these boxes here, right? Make a group, create a group of drawings, and just write something as a title, right? I just leave it for group 1. And what this will help you with, these 2, is to identify, is the structure corrective or is it impulsive? What you do is, when you look at this range, or you look at a range on the 15-minute or the 1 hour or the 4 hour, right? It doesn't matter. Can you count it as an impulse, as a diagonal, or a multi-1-2? If you cannot do that with confidence and high probabilities, you're likely looking at a corrective structure. Now, you don't then even need to know what corrective structure. Right? It doesn't even really matter per se. It depends on your entries, your way of trading, if you really want to know in detail what the target areas are for reversal. But if you can exclude this, then this becomes automatically high probability. And it doesn't even really matter what you're looking at, because sooner or later you look for the high to be taken in this particular example. Now, let me show you what I mean by actually turning the chart off. It's going to be a bit of an educational live stream as well, I suppose. So if we have a bull market and we look at price moves up, right, a short range and short range, and then we start a bigger range over here, right? Now, if you want to see a big reversal on the chart, right, if you, or at least if you want price to have the opportunity to create a big reversal on the chart, you always need to start with a 5-wave structure. You need to start with an impulse, 1, 2, 3, 4, 5-wave structure, right? If you are not starting with an impulsive structure, you're going to be looking at corrective structures and the high to be taken, and not a very, very big reversal. Of course, even in this case here, you can have 20, 30, 40%, but you're not looking at a very big reversal, right? So impulse, diagonal, multi, 1, 2, and in a bear market, 1, 2, 3, 4, and 5, in that case, it's the other way around. If you can't confidently count this move to the upside as an impulse diagonal or multi 1, 2, you're looking for the low to be taken. So it gives directional bias. And that is what we, of course, try to do with Elliott waves, is create directional bias, which we can then use with our trading plans, right, to try and trade in the direction of the higher probability Elliott wave count. You can use other tools for entry and exit, right? You don't necessarily need Elliott waves for that. I also use other tools to get more precise entries and whatnot. But it will help you with extending your trades into bigger profits. Now that means that we have a high here. And if we want the probabilities on the high time frame to be higher for price to take out the high and go to all-time highs, we need to count this as a corrective structure. In other words, we want to not count it as an impulse diagonal multi 1, 2. Another tip is, it is much more difficult as an Elliott wave analyst to count a corrective structure instead of an impulsive structure. In other words, zigzag, flat, W and WXY in a triangle, right? There's more different corrective structures. They tend to be complex and difficult, especially in wave 4 environments, compared to actually quite simplistic impulsive structures, impulse diagonal, multi 1, 2. So it is much easier if you are newer to Elliott waves to try and count moves of a high or of a low as an impulse. And if it doesn't work, think corrective. And if you think corrective, higher probability, look for the low to be taken, or look for the high to be taken, right? So on the daily here, so we're going to use these. Right? We're going to use these. But if they fall down, you get a 5-wave move, right? So that is the thing. You want to have an impulsive structure. You want to count an impulse with confidence. Okay, so that being said, let's start then. No? Let's start. Samuel, what's up? Wave 2 or 4? I mean, it's in the end, the invalidation is wave 4, wave 2. Wave 3 is the same length as 1, which is not great in an impulse for a wave 4, but in a double 1, 2, your wave 2 is now very long. So both of them have something that's off. So I would just class them in the same class now. You just want to look for the highs to be taken. Okay, so we have a first move down and a move up. I am not yet even going to count Elliott waves here, right? I'm not even going to put numbers and letters and whatnot on my chart. I'm first actually going to pull a fib because I'm interested in this retracement. We made a high. We move down to the low, right? Looks like quite a sharp move on the daily time frame, no? And we retraced. That is interesting. So what I want to know now is, okay, where did we retrace to? Toggle on the fibs, drag them to the right, which you can, by the way, do by selecting the fib, click on shift and drag them right, okay? So it makes life easy. And what I can see is that we have an 886 touch. Now that immediately gives me at least a bit of a bias, but not a confirmation. The 886, rare for a wave 2, there we go again, everyone knows by now, right? If you look for an impulse, 1, 2, 3, 4, 5, the 886 is rare for 2, common for a wave B or a wave X, right? So at least that is something that I can keep in mind. So I'm going to keep that one on the chart, right? Now we have clearly a three-wave corrective structure to the upside here. This moves down, this move down here looks relatively sharp, right? Then we have another move down here, which looks quite sharp, right? So I'm just looking at, of course I know the subdegree counts here, right? But I'm just starting from the beginning. Dutch dude is not here. I'm French now. So we have a sharp move down, a three-wave up. Sharp move down. I don't yet know, right? Based on the daily time frame, I don't really know what's going on here. Of course, I know because of previous analysis, but we'll get to that. And then we have a final leg towards the downside, right? Volume moved down as the pattern was evolving to the downside. Oh, I don't want to remove that. So let's look at the structure. Can we count it as an impulse, a diagonal, or a multi-1-2? Impulse would be a 1, 2, 3, 4, 5 wave structure, right? Not allowed, so a 1, 2, 3, 4, 5. Not allowed to have overlap between a wave 1 and 4. Well, clearly here we have a lot of overlap, so an impulse doesn't work. This then leaves us with a diagonal or a multi-1-2. Well, in a multi-1-2, what you want to see is a wave 1, 2, 1, 2, and then a big move, right? You're looking for a 3, or even if you have a triple 1, 2, doesn't matter. You're looking for a very big, high volume, sharp move to the downside, which we didn't have. Because in the end, we move back up and not all the way down. So the multi-1-2, nope. Impulse, no. That leaves us with the diagonal, right? And in a diagonal, we are then looking for always a zigzag family structure in a wave 2 and a zigzag family structure in a wave 4. That is a must. Your wave 1, 3, and 5 can be impulsive structures, all of them, or three-wave zigzag structures. So in A, B, C, even WXYs or WXYXZs, right? Now let's do a little bit of analysis. Oh, I got to remove the brushes. So okay, impulse and multi-1-2, right? We're going to remove that for now. And we're going to stick with the diagonal and see if there's some probabilities for this diagonal structure. Now, if we look for a diagonal, we're going to be counting this 1, 2, 3, 4, 5, right? There's no other way. That's the way we are going to count this diagonal structure. Cool. Wave 2 in the diagonal, retrace to the 886. Happens. If you do hit at least an 886, let it be in a diagonal instead of a normal impulsive structure. Okay. Now we pull the trend line, right? Just for coordination. It is, by the way, very normal for a wave 5 to move beyond the 1, 2, 3 trend line, right? More often than not does a wave 5 move beyond the 1, 3 trend line. So that's interesting as well. We take a measurement, right? We take a measurement from the start to the end of 1 to the end of wave 2, toggle on the 1 to 1. Right? Drag this one to the right. And what you will see here is that the 1-to-1 on a candlestick chart is hit. On the line chart, by the way, it is not hit. So sometimes it's interesting to compare both charts. So again, on a candlestick chart, you can see we have wicks below the 1-to-1. On a candle or on a line chart, we do not. Oops. Right? On a line chart, we do not. Which is interesting because hitting the 1-to-1 trend-based subextension from the start to the end of 1 to the end of 2, right, is not that common in a diagonal structure, right? However, it is not an invalidation for a diagonal. And knowing that on the line chart, wave 3 is actually shorter than wave 1, right? It's perfectly fine to say that, okay, it's no problem, right? So then we have our 4 and our wave 5. Now, because of the nature of our 5 here, which looks to be 3 wavy, we have to consider also zigzag structures in a wave 1 and a wave 3. But we'll only find that out if we go to a lower time frame. So, okay, we'll go to the 4 hour. No? And we zoom in to our wave 5. Because if wave 5, 3, or wave 1 is a zigzag structure, they all have to be zigzag structures, right? Or double zigzag structures. So, okay, we can see a sharp move down, corrective structure, and another sharp move down. It looks very 3 wavy. 1, 2, 3, 4, 5, potential 5 finished here, right? Sideways, sharp move. Well, there's definitely something to say about a zigzag here, right? Now, the reason I don't go to the 1 hour, 15 minute and all that stuff is because we've already done this. We already have, like, you know, that type of information. I'm just like acting clueless and going from the start, no? Okay, we definitely have a 3 wavy structure in this wave 5 here. And if we want to count this as an impulse, then this has to be a wave 5, right? If you want to count this as a 1, 2, 3, sideways, 4, 5, then this wave 5 is extended, right? It is longer than your 3, definitely longer than your 1, 5 extended. However, it is rare in an impulse for an extended wave 5. Right? An extended wave 5 is definitely not common. And if we take a fib time from the start of the end of this range to, let's say, this area here, and then do this, and then do this, then we also made this high after the 6 fib time. So your wave 2 with your potential wave 4 here, right? Your wave 4 is very long compared to your wave 2. So it definitely has a 3 wavy structure to it instead of an impulsive structure, all right? Higher probabilities, one would say, on the structure of this count, it's a 3 waver. Now we can take a trend-based fib from the high to which low are we going to take? Arguably we have some sort of a flat here, A, B, C, right? I don't want to go in detail to a 1 hour. I don't need the 1 hour or the 15 minute. If we look for 1, 2, 3, 4, 5, we can end it either over here or over here, one of these two, right? 1, 2, 3, you can even have a 4 here, a flat, and a 5. Now just to double check, if we take a fib from this high, let's say to this low here, if that's the end of year 3, toggle on the 618, then we did not hit the 618, and if we move it down, we still didn't hit the 618. So wave 4 is not invalidated. So there's the probabilities here, at least, for potential 1, 2, 3, flatten 4, 5 down to end over here, right? And then have something like this, flat continuation. Okay, something to consider. Take a trend-based fib from the high to either one of these lows, right? Just to check the measurement, let's take the higher low for now. Do this, and then do this. Okay, so this is your common target area for your wave C. It's the white fibs. And if we take the lower low, right, then you can see the 1.618 is actually nicer respected compared to the higher low, right? So based on the target here, preferably you count this 1, 2, 3, flatten 4, and the 5, 3-wave structure, and the second leg to the downside. But there is at least something to say about an ABC, because the 1.618 is still a target for a wave C, relatively common. The most common target is the 1 to the 1.236, but it's still relatively common, no? Now with that in mind, let's also check wave 3 and wave 1. Right? We are chilling. I will be chatting in the meantime as well. But what's up, guys? Yeah, weekly is everywhere. Yeah, I can imagine. Weekly is the easiest to count. That's the easiest. Wave 4 on the weekly time frame. Now seeing the start of wave 5. Too early, really, because what you're looking for is an impulse to the upside, right? But there's something to say. Oh, where's my chat? There's definitely something to say about wave 4 being finished on the weekly, but as long as you don't get local confirmation, right? You can't be sure, right? Probability wise. So, and the confirmation is like locally what you at least want to see. If price takes this high, 67K. It's like 65 is first, then you have 66, then you have 68. Immediately I'm going to be looking here the moment you take the high. Doesn't mean you take it and you go off. Even if this turns into a flat, right? It doesn't matter. I'm still looking for price to move up here. So currently, if price takes this high, it's going to be automatic probabilities for price to reach at least 65. Even if you reject at 63 and move down to 57 or lower, automatically probabilities are higher. The moment you take this high, probabilities are high to take out 65, 67, 68. However, the way you take this high is important. Are you going to do that 1, 2, 3, 4, 5 without invalidating 4? 1, 2, 1, 2, continuation up in a bigger wave 3, or W, X, Y. Big difference, right? Big difference. Now we were looking for the weekend range, rejection at the resistance here, price moves down, takes the low, right? Quite nice bearish CVD divergences as price is moving to the downside, supporting a move to the downside. So that is all very, very nice, but now it's just about waiting till you get support. I have absolutely zero interest to long into a downtrend with bearish CVD divergences. So what I'm looking for now is for the move down here locally to stop, first of all. And what I want to see is price to start grinding again to the upside, right? So higher highs, higher lows locally, right? On the, let's say, a 15-minute time frame minimum, right? And then I want to see bullish structures, bit of a retracement, bullish CVDs, maybe flipping resistance back into support. And that is when I start to get interested. I'm not here to snipe a low. I'm not here to snipe a high, but I am here to grab the middle part, right? So today I took a short, right? We hit resistance. Was that my entry? No, it was not, right? My entry came a little bit later once I got for myself more confirmation of price moving down, right? So yes, there is definitely something to say for a wave 4 here to be finished and up in a wave 5. Currently on the weekly, the highest probabilities are for a wave 4 and a wave 5 to the upside. But you do also want local confirmation, right? So you got to at least take out this high 62.7 because now it's a 3-wave structure. We're looking for of course, a 5-wave structure. But the probabilities are highest for at least on the weekly to move up for now. I will, in this live stream, also analyze the move down from 70K to 49K, which is going to be interesting. I'll tell you that. What's up, Donovan? It depends on the market, but what you want to see is an impulse. So if you just fall down, you got your impulse. So that's what you're looking for. Mid 40K. It's too early to call mid 40s. You're at 60K, right? So you have a 3-wave structure up. You didn't change market structure. You have at the moment 3-wave structure to the downside locally, not yet an impulse, right? Preferably, of course, locally you look for an impulse 1-2-1-2 or WXY double zigzag. So it's too early to talk about the drama counts, but I just explained what I'm looking for locally, of course. Yeah, Dutch dude. What's up, MJ? Michael, also from Poland. Papa, how you doing, man? How are you doing? And Panda Wave, you never know with me. Here I am again. How long is this live stream going? Oh, I don't know, till we analyze the chart. Again, like a fresh analysis. So I'll probably be live for a while. Call to Peter. Yo, cheers, man. Oh, by the way, about the email, can you fill in the form that we have? Which makes it a bit easier to manage it all. Pin message. It's this one. Cheers, Carl. But yeah, it's a little bit easier for the administration. Dayon, welcome. Just wave 4. It doesn't have to go to the end of the previous wave 4, right? So on Elliott Wave International, they say a wave 4 of a higher degree, right, likes to retrace to the wave 4 of a lower degree. And it is also a target for a wave 4 of a higher degree to move towards the termination point of a wave 4 of a lower degree. And that would indeed be around the 40K. But the minimum target is wave 4 of a lower degree. However, on index, we didn't actually hit that chart or that wave 4. Massive long incoming in the next few hours. I'm not interested in longs at the moment. I just wait for price to stabilize. ABC up. Yeah. It's very interesting. Late night stream, love it. What's the link is for the CVD template with the are we moving? Profit increasing. Oh, that's nice. The link is for the CVD template with the lines, right? With the lines. So that's what it's for. Solid move down, though. Solid move down. But that is also why we are live, because of this range on the high time frame. Because the thing is, here's the thing. This move down, counting this as an impulse is very tricky. It definitely has something 3 wavy to it, A, B, C. But we'll get to that. We'll get to that. Okay, so we can count this as a leading diagonal, right? Wave 5 does tend to look a little bit 3 wavy here. Has to be said, no. Now we do know that counting this as 1, 2, 3, 4, 5 doesn't work. We can't have a double zigzag in here. Wave 4 either hit the 618, invalidates a wave 4, or wave 4 is 6 times longer than 2, which is low probabilities, right? Low probabilities. Now, can wave 3 be a 3-wave structure? It can be, but then we need to have a W, X, and a Y structure in here, right? A double zigzag structure. Because of the sharp move to the downside, we do have this hiccup, which makes it interesting to consider ABC, correction, A, B, and then your final leg down here. But okay, at least something to say about a 3-wave structure there. And also here, you can see it's very messy in the middle. Instead of a simple 1, 2, 3, 4, 5, right? You don't have a clear wave 3 in here. Now, that also increases probabilities. You have something 3 wavy going on there. So in other words, right, we now know that we can count that structure as a potential diagonal where all of the waves are 3-wave structures, okay? So that being said, let's put this in a folder. What is this again? Oh, yeah. Cool. So we analyzed the first structure, checking the impulse, diagonal, or a multi 1-2, and we know now that a diagonal is an option. Huh? Now, if the diagonal is an option, then in your most bearish scenario, right, in your absolute most bearish scenario, you're counting that diagonal as a wave 1, right? Of course. In a bullish scenario, you count this diagonal as a wave A, and you look for an ABC, right? In that case, your invalidation in both cases is very clear. That's the high. And now you can already see we start to have, create a bit of a plan here, no? A bit of a plan. So, okay, we can count it as a diagonal. I haven't yet gone over the corrective structures, right? That's still coming. But at least considering impulsive structures, we can count it as a diagonal. And that is important for the probabilities. So, okay, we know we can have a wave 1 or a potential wave A here to the downside. Cool. No? And then we look at this retracement to the upside, because we know that after a wave 1 or A, we want a 3-wave corrective structure. So we need to pay attention to the retracement. We take a fib from the high to the low. Let's see. I already know, of course. We move to the 886. Now, something we do have to keep in mind is that after a diagonal, preferably you see a deep corrective structure in a wave 2 or B. Now deep is usually still not the 886, as the 886 remains a very uncommon target for a wave 2, more often for a wave B though. But if you do see a sharp correction, then let it be after a diagonal structure. Now we hit the 886, and as we usually say, 886 hit, generally probabilities are higher that any of the structures afterwards are corrective, not impulsive. Corrective, not impulsive. Well, something to keep in mind, at least with regards to probabilities. But if you know a lot about Elliott waves and you know the theory, you will also read and realize that after a diagonal, generally corrective structures go towards the origin of the diagonal, right? Which in this case would be, of course, the high, but you don't want to take the high. That's the invalidation. No? Okay. So it's not invalidated. Didn't take the all-time high. 886 retracement is deep for a 2 or B after a leading diagonal in a wave 1 or a wave A. Can we end the corrective structure here? We'll see. Because we did take the low here. So if we look for an ABC to the downside, that is already finished, right? That would be finished at 50, what was that, 53. Then your most common target for C is the 1-to-1 to the 1.236. Remember the analysis from back in the day? Already feels like a long time ago, no? We hit the 1-to-1 here. And the 1-to-1 is a common target for a wave C. And what happened after is that price moved to the upside. I should probably take 1 second. I'm messing up. So first of all, what I want to say is, if you want more confidence of a potential C being in at a low, right? We're not yet looking at the subwave structures and what happened after. But if you're looking for wave C, you want to have a wave 1, 2, 3, 4, 5, and then you want to move back up. And just to avoid another 4 and another 5, you want to price to hit the 618, taken from your 2 to the low, right? So if you take it from your 2 to the low, then eventually we hit it, right? Okay, so, okay. We know, okay, we're not looking for a 4, we look for a potential structure ending here, right? However, if this is a finished A, B, C structure, and we look for a continuation to the upside, of course, you don't want the low to be taken. Guess what happened? It's free, Noah. I do ask people to register with one of the partner links just to support the channel, because there's so much out there free. CVD, my old template, the one-pager, the Elliott Wave, full Elliott Wave course. You don't need anything else with Elliott Waves. You don't need to buy anyone's course except just go to my YouTube playlist and look at all the information is there. So don't waste money on that sort of stuff, in my opinion. But yeah, it's completely free. The only thing I ask in that case is, please support the channel a bit by just registering with one of the partners. We have great stuff, always campaigns with money and bonuses, and that's the only thing. But yeah, other than that, completely free. But yeah, 1-to-1, common target. Okay, cool. Potential for a wave C. But the problem, of course, is we took the low. So we cannot end the corrective structure here if we're looking for an A, B, and a wave C. Okay. Something we have to keep in mind. So can wave C end here? Yes, but the correction cannot end here. But then we had this move to the upside. And I have seen people counting this correctively in WXYs and WXYXZs and whatnot. But guys, a WXYXZ, right, is an incredibly rare corrective structure. It's very rare. Never preferred unless all the other stuff fails. Second, if a WXYXZ looks like this, right, it's already very dodgy, no? Because a WXYXZ should be a ranging structure, of course, triple zigzag to the upside, no? And wave Y most commonly is at the 1-to-1. So if you count W, X, right? If this is your W, you want your X, you want a Y, X, and a Z. You don't want to see that, right? That's not great. It's not great. So just looking at this on a daily time frame, we have up, down, up, down, up, down, up, down, up. I mean, in my opinion, if we just remove the chart now, it makes a lot more sense to count this as an impulse. 1 second, right? I mean, honestly, it looks like a nice double 1-2, wave 3, 4, 5, 4, 5, finishing an impulse to the upside, no? Probability-wise, it makes the most sense. Elliott waves are really complicated. They are. But that is why I do the work for you, in some way. Of course, please do your own, do your own research and have your own plan and your own strategy. But you don't necessarily have to learn Elliott waves in a lot of detail, as I'm, of course, here to help you out. Now, by all means, the best thing to do is, of course, to always try to add stuff to your toolbox and learn it yourself. You can't do anything better than trying to learn it yourself. But it is a journey. It's not something you're going to be learning in a month's time, right? So start learning Elliott waves with all the free stuff. Like, check my YouTube playlist on the homepage. Go to the website in the description, right? Scroll down a bit, Elliott Wave Education. There's a website there which is completely free. I'm not affiliated. I don't get anything. But that is the website that I mainly used when I was studying back in the day. And then you have the book of Elliott Waves, which is the official book from Frost and Prechter, right? Which is a nice to have, not a must have. And then you have the gold membership, where that's where I'm active, right? That's where I give feedback on people's counts, and we do private live streams sometimes, and I chat and I check, and that's where I am to help people to shorten the learning curve in Elliott Waves, right? So helping them out as much as I can. So ABC, but this move to the upside here, right? This move to the upside looks impulsive, no? But if this move to the upside looks impulsive, and we take the low after, we cannot count this as a wave 1 or A, because taking the low is an invalidation, right? For a wave 1A, 2B, 3C. In other words, if we count this move up as an impulse, we cannot count the low as a C, because this move up has to be a wave C. But this move up can only be a wave C in a zigzag or a flat. With that in mind, we have to consider flats, right? So you also see, by the way, how counts maybe are evolving. I'm trying my best here to make things as easy as possible, but also educational in how things evolve, okay? Because I get a lot of questions about specifically that, like, you go from this count into the next count when something happens, but how does that work? This is how it works. So we cannot end wave C here, because if this is a 1 or A, you want 2, B, C, 3. Okay, it doesn't work. Okay, so we have to move C away from the low. And this low here then becomes a higher probability wave B. No? Okay. Oh yeah, and then this is your C. Up. Now if we label this as a B, it also means that ending wave B or 2 here is not two great probabilities, unless you look into multi 1-2s. Okay, 1 second. I'm gonna put some stuff on the chart. Right? I'm gonna put so in this case, right? We don't really know where A starts just yet. So we have our A. We just know B and C. Right? That's what we have figured out. Okay, we have our B. We have our C. Okay. Cool. Now, if you end wave B here, you cannot count this structure anymore as a nice wave C. I mean, unless this is your 1 and then 2 and this is 3 and you have 4 and you have 5, but that would be a contracting diagonal, at least something to consider. But that would be no, that's not possible. 1, 2, 3, 4, 5. You're not allowed to have a flat in a wave 2 of a diagonal. So that doesn't work. And second, this being a diagonal, with this also being a diagonal, incredibly low probabilities, right? Very low probabilities. You're going to have a diagonal in A and also a diagonal in C, right? It's incredibly rare. So never preferred. So preferably your wave C is a sharp move, right? Not a diagonal. Preferably it's a sharper move. But now we know we cannot finish your wave C here. So in other words, we already know that if we look at a correction, this B has to move here, right? We cannot put wave B here anymore because we need wave B to end with C at the low. But if this was the end of C, right, in an ABC, you wanted to see 1, 2, 3. We didn't get a 1, 2, 3. So therefore, this looking best as an impulse is labeled a wave C. This is a B, which means that therefore, your yellow B can only go here now. And if you do want to end the correction, you need to have a C here. So that you have a diagonal A, a corrective three-wave structure in B, right? We'll check that in more detail in a second. And then you have your wave C. And your wave C preferably is a sharp move and not a diagonal, because wave A is already a diagonal. And having a diagonal A with a diagonal C is incredibly rare because of the rule of alternation, right? In the rule of alternation, which also is valid for corrective structures, right? Most commonly, the rule of alternation is known to compare wave 2 and 4. 1, 2, 3, 4, 5. If wave 2, most commonly, is deep, short, and simple, like a zigzag, 5, 3, 5, ta-ta-ta, wave 4 is most commonly sideways, corrective, and shallow. If wave 2 is very long, wave 4 tends to be short. If wave 2 is very complex, wave 4 has a higher probability of being simple. Still also high probability of being complex, by the way. But this is the rule of alternation. But in alternation, you also talk about the corrective structures, right? So in a wave A, B, C, if your wave A is a diagonal, you want your wave C to be sharp. Most commonly in a zigzag, wave A is sharp, then you have B, and your wave C, then you have your B, and your wave C tends to be, take more time compared to a wave A. That's most common, but it's not a must. It's just, this is really the nitty-gritty of Elliott waves, but it's most common for A to be quick and wave C to be slow. Know what you want to know. Or what's that thing? So Ethereum, we checked Ethereum earlier today in the altcoin live stream. If you go to the homepage of my channel and you scroll down a little bit, then you see the altcoin playlist. Make sure to check it out. ETH was in starting at minute 20. Okay, so with that in mind, right? If you look at corrective structures, A, diagonal, C, you want C to be sharp, right? If you look at a W and an X and a Y, right? If wave W is a flat, wave Y generally has lower probabilities of also being a flat, right? So, okay, cool. So preferably wave C is sharp. Huh? But now we have two scenarios on the chart and it's starting to become a mess. So what I'm now going to do, right, because this is the moment where, okay, we've analyzed quite a bit of the chart, but now it starts to become very messy. So this is the moment where I'm like, okay, I want to split the scenarios. The moment I move my B to the right, I want to split it because my 2 and B are not at the same high anymore. They're going to be different counts now, right? And just to make sure that I feel comfortable counting, I want to make sure my object tree is organized as well. So now we're going to move some stuff around. Let me see what's in here. Okay. So what we're going to do is move this out. Let's see. let's see. And the 886, we're going to remove that as well because we don't need it. And then we make this ABC. Oh, it's for the sake of the example. Cool. So then we have our ABC. So we know wave A is a diagonal. I don't have to put the whole diagonal on my chart anymore because we already figured there is the potential here for at least a diagonal, right? We know. Now we want to nicely color code our chart like it is art. So there we go. We know wave A is 5 waves. We don't need to put 1, 2, 3, 4, 5 on the chart, right? It's just too much information. Keep it clean, keep it nice. And then we have our wave B here. Now the only thing we know with our B at the moment is that this move up is a higher probability of being a wave C. What we don't actually really know yet is where do we put wave A, right? So where is your A? We know B is the low, we know C is this high, but where's your A? Is this your A? Or is this your A? Now, if this is your A, right, you need a 3 wave in A, 3 wave in B, 5 wave in C. Your wave C did not take the high of your wave A, right? Which means this then becomes a running flat. Running flat is very rare, has to be said. Okay, so we know if we put wave A here, we have a running flat in B. If we put wave A down here, let me remove this, then we need to take a fib from the low to the high of A, and we toggle on the expanding flat Fibonacci targets, and then we do this shortly, and right, your most common target for an expanding flat is between the 1.236 and the 1.38, these two, right? The 1.618, once touched, significantly reduces probabilities for a flat. So now you have a running flat, ABC, which is rare, versus a smaller flat, ABC, with a wave B going to the 1.618. And now we got to hold up and be like, what's better, right? Third, this is not the focus of the live stream. If you want to get more concrete, to the point analysis, go to the previous live stream, right? In this live stream, we analyze the chart from the start with lots of explanation and education. If that's not your vibe in this live stream, long story short, go to the previous live stream, go to the previous video, check that out, right? That video is like 10 minutes, 15 minutes, and you can skip the remainder of this live stream and you can happily continue with your evening. But that is not the goal of this live stream. So long story short, we continue to analyze and we educate people that want to know how to analyze a completely empty range and make a high probability Elliott Wave plan based on the analysis, right? If that's not for you and you want to get short and sweet, that's perfectly fine, but then just look at the previous analysis. Because I generally upload 3 videos a day, so just go to the previous video. This is still live, yes. Welcome. So, yeah. Also, many analysts are, of course, counting off stream, right? They don't generally tend to do full empty chart to a full plan and show the different steps. Now, I think it is interesting to share it, and like Lupo said, you know, it's completely free, but I don't even want to consider getting paid for this stuff. It's hopefully people learn something, right? So yeah, and you understand the process, because this is stuff that I do in the background, right? And of course, I do it very quick and but now I like to explain a lot more, so it goes slow. But you know, if you want to be short and sweet, and you know, check the previous analysis. But yeah, we do have a solid move down. There's the potential here for 1, 2, 3. If that's what you want to hear, and then look for range in 4 and 5. At the beginning of the live stream, I already explained what I'm looking for. So let's go to the 15 in a very short minute. But here, resistance, we hit the resistance, the target box that we were looking for, continuation of the weekend range. Remember, over here, We hit resistance, accompanied by then continuous bearish CVD divergences as price was moving towards the downside, increasing probabilities to move to the downside. We now got the move to the downside. Highest volume is currently in the latest move. If impulsive, you're looking for a wave 1, 2, 3, 4, 5. Therefore, you take a Fibonacci, put it on this high, take it to this low. You toggle on the 0.618 Fibonacci. This is going very quick, but I don't want to stand still for too long. If price moves to the upside, poof, without at least forming a bigger range and then move down again, bullish. You're looking for ABC, continuation to the upside. If we count a 5-wave structure, 1, 2, 3, 4, 5, your bullish scenario becomes here A, B, C to the downside. Want to hit support here, trend-based fib from the high to the low to the high. Right, this becomes your bullish scenario, trend-based fib, there we go, do this, do that. And then so this is stuff that I generally do, of course, by myself off stream. This goes very quick. 58.6, 57.9, most common target area for a zigzag. Confluence with the blue box. 1.618 is also still common. So pretty much you want price to move up in this box. If it doesn't, then the probabilities are higher to move down to 55K. Boxes between 57.9, 57K. Right, and in that case, you're looking for A, B, C as the bullish scenario, 1, 2, 3, and then eventually 4, 5 in the bearish scenario, where for wave 3, you generally want to lose this box. How would I decide on potential new entries and areas of interest? Well, I took a short over here, as explained in the setups update earlier today in the morning. Look for the rejection, look for local CVD divergences as well, very interesting, price moving down, okay, cool. The only way I get interested for longs now is for price to hit support, preferably hit support, right? That's at least what I'm looking for. Wait for a range to form because I'm not in this market to try and catch the lows, be cool with my like P&L picture of look everyone, I catch the low, look at me go, right? Like that's bullshit. So what I want to look for is, unless you have a clear plan, of course, no FOMO, no YOLO, no catching knives, unless that is your plan. I want to wait for a range. I want to wait for price to stabilize, grind to the upside, look for bullish structures from an Elliott Wave point of view, maybe flip support or resistance back in support, retracement, and continuous bullish CVD divergences to support my narrative of moving towards the upside. That is currently the only thing that I am looking for. I'm not really looking at this move towards the upside here at the moment. Reason is this move to the upside can be an ABC. This move to the upside can be a 1, 2, and then another, 1, 2, 1, 2, up in 3. And it can still be 1, 2, 3, 4, 5. You have 3 different scenarios, cool, but I am much more interested in looking locally. Your bearish scenario preferably would be WXY. The moment you take out this high, probabilities are high to move to at least 65, 67, 68K, right? For now, probabilities locally higher to move down with the bearish divs. Look for support, look for the reaction. There you go. So that being said, in about a 3 minutes time frame, or 3 minutes, well, I'm so much with my head in Elliott Waves. Let's continue. So, cool. Where were we? Oh yeah, wave A. So we now need to juggle because of wave A, putting it here or putting it there, no? So we have a running flat versus an expanding flat. Now an expanding flat is a lot more common where your wave C moves beyond your wave A high compared to a running flat where wave C does not take the high. However, what is very uncommon, arguably a bit rare for an expanding flat, is that your wave B hits the 1.618. So now we have a 1.618 versus a running flat. Honestly, I don't even really care how you're going to count this because it doesn't actually really matter. Because by all means, base stays here. Because by all means, if you put your wave A here or you put your A here, and then what? Right? Your wave B in yellow is still going to be over here. So running flat or expanding flat with 1.618, well, yeah, doesn't matter. Doesn't matter. Your B is still going to be over there. No? So therefore, we remove it. But we can now remove it because we have done the analysis, right? So we know, okay, wave C instead of 1 or A, right? Wave C has to be a flat ABC or ABC, right? In both cases, you want to end over here, but it's at least good to know running flat or wave B 1.618, right? Okay. In a running flat, by the way, you're then looking for 3, 3, 3, right? So you then have, just for the Elliott Wave nerds, right? W, X, Y, okay? If you count this as a, oh, sorry, this is not in a running flat. In a local ABC, you count it as a WXY, okay? And of course, in a bigger flat, this needs to be ABC, right? So you need a zigzag here. Most commonly, your wave B is a zigzag structure, right? So you want to look for ABC. Now, in that case, if you take a trend-based fib from the high to the low to the high, you did hit the 0.618, ABC. 0.618 is a rare target for a wave C, right? In a zigzag. So you would need ABC here, then some sort of an ABC down, right? 0.618. So arguably, I would favor the W, X, and then a Y over probably the running flat based on that analysis. Okay, so yeah, know the Y. Yo guys, are you guys okay if I quickly head out and get myself some water? I'll be back in like 10 seconds because I don't know. I only needed 2 seconds. I still have a full bottle of water. Oh, drinking too quick, yo. Woohoo! Gotta keep that. That throat liquid. No, I still had a vodka. Yeah, John. John, are you gonna trade upcoming week or you gotta work? I appreciate your slow explanations. I think we all learn more when you explain more. Cheers, Alchemy. I try to, of course, answer like those type of questions. I just very quickly go through what I look for locally, and so everyone knows what I'm looking for locally. So that's why I like to use CVD as well in confluence with my stuff, like Elliott Waves. CVD is so good, man. God, so good. Okay. So we know our B. And if we are looking for a C to the downside, right, in a bullish scenario, ABC, then preferably you want a sharp C because of the horizontal A, right? So a diagonal A, preferably you do not have a diagonal in C. Now, is this C finished or not in this particular Elliott Wave scenario? Question mark. Well, it's not too difficult to figure that one out because wave C has to be a 5-wave structure. And if we want to count this as a wait. First of all, your common target for C is take a trend-based fib from the start to the end of A. I misclicked. To the end of your B. Right, so there we go. All right, so 1 to the 1.236 is your most common target. No, Peter, keep that. And the 1.618 at 41.2 is still common, right? Still common, but your most common is this, right? So price hit the most common target and we moved up. Okay. We know we now have this information, right? We have this information, cool. So we have hit the common target for C. Now, if wave C ends at the low, we want to count a 5-wave structure. Now we know that this area here has already hit the common target area for wave C, which means that counting this a wave 1 for then a 2, 3, right, is going to be a little bit problematic. Because if you get a wave 3 to the downside, then, well, you're going to be looking for very low prices most of the time. No? Most commonly in an impulse, 1, 2, 3, 4, 5, wave 3, by far most commonly, is wave 3 is the longest, strongest, and most impulsive wave. The only way for price to not move into bear market prices below pretty much 40k would be, if wave C is unfinished, would be to count 1, 2, 3, no overlap with 4 and 5. What I mean is no overlap between 1 and 4. And then a wave 5 to the downside, where wave 5 is shorter than 3. Because in an impulse, right, there's only 3 rules you have to remember. Wave 3, that is the one I'm talking about here most importantly. Wave 3 is not allowed to be the shortest wave between 1, 3, and 5. Wave 1 and 4 are not allowed to overlap, and wave 2 is never allowed to take the origin of 1. So the only way to have an unfinished C here is a wave 1, 2, 3, 4, 5, where you do not want wave 4 to overlap with this low, because then you get into a diagonal again. But wave A is already a diagonal. We don't want wave C to be a diagonal. Right? So this is your unfinished C, but then wave 1 is an extended wave 1, but an extended wave 1 is a lower probability impulse compared to an extended 3. Right? There's 3 impulses, 1, 2, 3, 4, 5, extended 3, 1, 2, 3, 4, 5, extended 1, 1, 2, 3, 4, 5, extended 5. Most common, right? This one is, I wouldn't say common, but more common on weekly or higher time frames. This is your typical blow off top. No? And then you have your extended wave 1. But an extended wave 1 is not a common impulsive structure compared to an extended wave 3. So the only way to get a wave C down here below the current low would be for an extended wave 1, 2, 3, 4, 5, where 5 is shorter than wave 3, not taking the low of 38, because then we pretty much get into bear market scenarios. I mean, your invalidation for wave 4 in a weekly is 37.7, which of course is very close to the low. So I mean, so you don't really want to do that. But extended 1, based on the theory, right, that stuff that's in your head, low probability. So preferably, if we count ABC, C is in. So we have literally done all of that work to just know, okay, preferably C is in. Reason, by the way, that preferably your C is in is if you count 1, 2, 3, 4, 5, if that would be an idea, take a fib from the high of this. If this is the high of your 2 here or this here, it doesn't matter. In both of the cases, you touch the 618. 618 is an invalidation for 4. So low probabilities. So therefore, probabilities are very, very, very low, pretty much invalidated for 1, 2, 3, 4, 5. Therefore, wave C should be in. So we have now found a scenario on the chart starting with absolutely 0, right? Where we look for A, B, C, in, up. So we have a scenario. And voila, right? Now, it took a lot, of course, it takes a long time because I'm explaining. But this stuff takes 5 minutes, right? So it's okay. You check everything, you check the measurements, 3-wave, impulsive move, invalidated, and you'll very quickly get to an ABC. But hopefully I was able to at least show you the process of how to get to a finished ABC, right? And we are not yet talking about the awkwardness of this impulse to the downside. Because, of course, if this is an impulse to the downside, right, impulse in a wave C, we need to count this as a 5-wave structure, which you're going to have an extended 5 in here, right? But yeah, we'll get there. We'll get there. We're going to talk about that in a little bit. Cool. Finished ABC. Ta-da! That is 1. So we can now remove the zigzag because we already got the zigzag. Okay. Now, before I go into the bearish scenario, which is an impulse down, I want to shortly exclude two scenarios because it's just simple. Let me put this back on. Let me start with this. Okay, so I want to exclude the flat and the triangle quick, just so you know. If we take a fib from this high, right, to this low or this low, but I don't want to go in too much detail here, but actually if this is okay. In a flat, you're looking for 3, 3, 5, where your wave B has to move to at least the 0.9 fib taken from the start to the end of A. Wave A has to be a 3-wave structure. Yes, there's 2 wave A's. You have a 5-wave A and a 3-wave A. A 5-wave A is a zigzag. A 3-wave A is a flat. All right? Big difference. In a flat, you generally want to see the high of A taken. In a zigzag, that's your invalidation. Right? So with a flat, you want to see a 3-3-5, meaning we need to count a 3-wave structure here. However, and I don't really want to go into the 4-hour time frame, but just to let you know, probabilities are much higher for a 3-wave structure to end here instead of here. Counting this as an A, B, C gives problems in wave 4. You can go back in like to April or to April to check the analysis in detail. The problem is wave 4 in your C 1, 2, 3, 4, 5 due to wave 4 being or 6 times longer than 2, or you hit the 618, which is an invalidation. Double zigzag in a W, X, and then a wave Y. X hit the 0.7. Very low probabilities for that to happen. So yeah, but it doesn't really matter because if you take a fib even from the low to the high and you toggle on the 0.9 regular flat, then what you can see is that we actually did not hit the 0.9 minimum target for wave B, not hit. Remove it. Oh. So the flat goes out. Leaves us with the triangle and the WXY. In a triangle, four out of the 5 waves have to be zigzag structures. If one wave is not, I should say that a bit more detailed. 4 out of the 5 waves has to be a simple zigzag structure, which means a 5-3-5 ABC up or to the downside. If one of the waves is not a simple zigzag, it most commonly is a wave C, by far most common. If not a wave C, D. And if not D, B. Most common, less common, very uncommon, right? So in other words, preferably your wave C is your difficult corrective structure if you have one. So in a triangle, what you want to see is wave A, B, C, D, and then a wave E. A common triangle is the contracting triangle. Another common triangle is a running triangle. A, B, C, D, E, where your B moves above your A. Very common. Right? These are the 2 most common triangles, right? And then you have the barrier triangle, right? Barrier triangle, I don't know what the pattern people say, but that's this one, right? That's your barrier triangle. And you have, of course, an expanding triangle, but these are very rare. Very, very rare. So when we look at the triangle, can we count a triangle here? A, B, C. Well, C went below A here. That is not allowed, right? If you want to count A, B, C, no, it doesn't work here as well. So it's like there's no triangles in here. Like A, B, C, C goes below A all the time. So okay, we can just remove the triangle, which leaves us with the WXY and of course the zigzag that we already have. So now we have the diagonal. Okay, yeah. So Two more things to look at. As a papa. Please could you have a look on Discord? I'll post something nice there for you. Some cool info. I'll make sure to check it after the stream though. While now we're in the flow. You know, don't want to go back and forth. You think the low is in 58.2. Preferably not. Preferably it still moves down a little bit further. Because the main support here is 57.9 to 57k. So, but then again, look, I'm not in this, and I said it earlier, I'm not in this business to catch lows, and you should neither, unless you have a very, very good plan for trying to catch lows, right? There is no reason, unless you use probably stuff like order flow, the DOM, tick charts, CVD divs on a tick chart, and that sort of stuff. There's probably you shouldn't try catching lows. You should try to miss the low. That's much more difficult because your psychology says, oh shit, we have a wick and a green candle. I got to enter because the low is in, right? But instead, it is much more effective for by far most people to wait for a range to form, right? So you want to hit support, you move down. This is what we have on the chart right now, right? We have this, and now we have this. It is for 95% of the people, which generally, of course, are the losing traders, to wait for a range to form, which is going to test your patience, your FOMO, and all of your psychology stuff, because you're going to be like, fuck, I missed the low again, and da-da-da-da-da-da. Wait for that range to form, and then look for signs of strength according to your plan. Now, I like to look for CVD, Elliott waves, support resistance, right? The stuff, the blue boxes that I have, that stuff I like to see. I like to see a grind to the upside, supported by bullish CVDs. Usually when a support area, in my case, is hit, it takes hours before I enter, right? I don't care about a low or a high. You know? I care about the middle of the sandwich. So bullish CVD on the 3 minutes. Be aware that bullish CVD on a 3-minute time frame, when price is impulsively moving to the downside, has a high probability of being leading. So look, I wait for a 50-minute range, but that's my plan. If you are a scalper and you trade 3-minute CVD, then yes, there's potentially an opportunity if you use it in combination with other tools, and you can trade it. Well, there's no reason to not do it. It might play out as well, and you might have a profitable trade. It might not play out, but that is your plan. So, of course. I'd like to be in the middle of the sandwich. Oh, I know what you're talking about. The Lift 99. Yeah. Yeah. I know exactly what you mean. Okay. Let's continue. So we have our bullish scenario, the ABC finished, right? Preferably, we know now that wave C is in, right? We don't want wave C to go lower. We don't want C to be a diagonal and all that stuff. Preferably, if looking at a finished zigzag, your low is in. Okay, now let's continue with the most bullish, most bearish scenario, which is a wave 1, 2. And you look for much lower prices because you're going to be looking for wave 3 to the downside. So this is an impulse, bit of combination with a multi 1, 2, because this is your 1. You could finish a wave 2 here, have another 1, 2, continuation down. Now it is most common, however, for a double 1, 2 to be the same structure. So if the second wave 2 is a flat, preferably your first wave 2 is actually also a flat. It's not a must, it's not a requirement, it's just something you generally like to see, but you know. But by all means, this would then be your 1, correction in 2, another 1, another 2. You then here need another 1 and another 2. Now you can see it starts to be messy because then you have a triple 1, 2, right? What is preferably common in a multi 1, 2 is that you have 1, 2. Oh, sorry, what am I doing here? Do this and do this. You have 1, 2, 1, 2, 1, 2, and then you move down, so that your ones are constantly a little bit higher or lower compared to the previous one, right? It's preferred. Again, it's not a rule, it's not a guideline per se, it's just what you like to see on the chart. It's something that you saw when we bounced from 24K all the way to the ETF launch. What was that, 65 or something, right? From 24K, you had a nice move up and down and up and down and up and up, and you know, every wave 1 was higher, and then you got the wave 3 towards the upside, right? Just after the intern pressed the button, remember? So yeah. Anyway, a triple 1, 2, 1 and then 2 and then 1, 2 with a flat here and then another 1, 2. I don't really like that. Your second wave 1 in that case here, right? 1, 2, ta ta ta. Right, so first of all, your first wave 2 hit the 886. Okay, you know, wave 1 is a diagonal. 2, then, you know, after a diagonal, you do expect a deep retracement, but an 886 for a wave 2 remains incredibly uncommon, of course. If it happens, then preferably after a diagonal, right? Not gonna lie, but still. But having a triple 1, 2 here, well, preferably, right? A triple 1, 2, meaning 1, 2, 1, 2, 1 second, because I'm gonna show you what a triple 1, 2 would look like. And then you need another 1, another 2. Now, the reason we know that in a triple 1, 2, this is gonna be your third one, is because we already analyzed that if this is a wave C, which is also a 5-wave structure, the low has to be in, right? Remember? Because your wave 4 hit the 0.618. So we know that if this is an impulse, it has to be finished. So you want your third wave 1 to be here. However, what you can also see is that if I would do 1, 2, 1, 2, 3, or a triple 1, 2, it's no different. You're going to be looking for a very big move down. It only matters if you get into the 4 5s. With a triple 1, 2, 1, 2, 1, 2, 1, 2, you get a big wave 3 and then 4, 5, 4, 5, 4, 5. You get 3 4s and 3 5s. That's the only difference. But we are not there yet, right? We didn't have a wave 3 to the downside. So what I would like to do now instead is remove the lower degree 1, 2, and I just move everything to the right. So I am more conservative, right? This is more conservative. Then I put my 2 here. I know that I can put my 2 here because I know that my wave B is here, because I already analyzed this part, W, X, Y, end of 2 down. So my A, B, C, preferably C is finished, and my 1, 2, 1, 2, and then 3. Your first 1, 2 is the same as your A, B. Your lower degree 1 is on the position of C, and then you look for 2 and down, right? And then you're going to go down, down. Right? It's not a small down. If you look for a wave 3 to the downside, you are now, in this bearish scenario, talking about a wave 3 of 3. Right? 1 second here. What am I doing? Do this, do that. All right, and then do this, do that. Beautiful. Okay, so we then have our 2 here, right? So this is your multi 1, 2. And then you look for a big wave 3 to the downside. No, big wave 3 to the downside. Now, just to give you an idea of the target, take a trend-based fib from the low to the high, from the high to the low of your green wave 1. Toggle on the 1.618, and 41.9 would be your minimum target for the green wave 3. Let me check log skill here for the fun and giggles, 45. Okay, so log skill is a little bit less hectic, but minimum would be mid 40s, right? 42, 45. That D. Hartman, by the way. Yo, sir, welcome to, oh wait, it's your second month, but still, thanks for coming back. Second month, silver badge. Yo, cheers, that D. Hartman. Welcome, man. I'm so lost. If you have a question, Faizan, make sure to ask. Right? Make sure to ask. I'll happily explain. I'll happily explain. So what we're doing for everyone that's here, what we're doing here is analyzing this range completely fresh. And I try to explain as much as I can completely on a new chart and educational, so that you know how things change and why I do certain things. Right? Let me move this, by the way, in my folder. So just for your overview, Faizan, bullish, right? Bullish scenario, finished ABC. We analyzed this whole structure since the start in detail on why this would be your highest probability ABC, zigzag, right? But this is a bullish scenario. And as an Elliott Wave analyst, you always need a bullish and a bearish scenario. You can't just be like, okay, I got a finished ABC. This is it, right? This is it, and up we go. That's not Elliott Wave analysis. You need the bullish count, which is this one, right? This is one of the two. We're going to continue discovering WXY. But this is your bullish count, but you always need a bearish count as well. Right? You can't just have a bullish count and then that's it. No. So we continue. So with the bearish 1-2, which is similar to an ABC, it's just that now you're right. Look at the chart. Instead of A, B, C, boom, and up, you have 1, 2, 1, 2. Impulse down. Minimum target for the green wave 3 would be at least 45, 42K, right? Minimum. And that is minimum because a wave 3 can easily extend to lower prices, right? So let's put that on the chart. So this is, of course, your most bearish scenario. Now, if we take a fib from the high to the low of your blue wave 1, we have to at least check if wave 2 retraced to the common target for a wave 2, right? And the common target for wave 2, everyone, is between the 0.5 and the 0.786 Fibonacci, which is what you see on the chart here, 59.5, 65.5K. We hit the golden pocket, which is a common target for a wave 2, right? So we know that the 05 is hit, the 382 is hit, so we can remove that from the chart. We leave the most common target area in the 886. Let's minimize this to 330, right? Make it a bit nice. We do like the charts to look good. Make it simple. Up. And put it in the group, which is going to now be called daily bear. And this one is going to be daily bull. Okay, so common target hit. And after, of course, a wave 2, you look for a big impulse down. If price, by the way, moves now up to this wave 2, 70K, it invalidates a double 1-2. Now, preferably, you want price to just move up to 67.6. If you move up to 67.6, probabilities are significantly going to be reduced for a double 1-2 here, right? We're not there yet, though. But at least it's good to know, I suppose. What does lower, and this is something I at least want to say, what does lower the probabilities, right, for the bearish scenario, a double 1-2, compared to a bullish scenario, is that price hit the 886. So there we go again, right? We did hit the 886. Take it from this high to the low, and there we go. Right? The 886, even after a diagonal, of wave 1, knowing that after a diagonal you do like to see a deep retracement, golden pocket, right? Most common for 2, 786, but the 886 by all means is still a rare target for a wave 2, and inside this corrective structure of 2 we hit the 886. So it's something to keep in mind. So therefore preferably, or at least the probabilities from an Elliott wave point of view, would be higher for a corrective structure here compared to an impulsive structure. So an ABC would have higher probabilities compared to a 1-2, 1-2, look for a big wave 3. It's just probabilities, right? We did have a diagonal in our wave 1, so having a deep retracement is something you like to see, but an 886 is not really what you like to see. It remains rare for a wave 2. So something we keep in mind, no? Something we keep in mind. Okay, I actually didn't do anything with fib time, but I don't think I should make it more complex than Elliott wave already is. So I'll leave explaining time for another day, but I am actually going to check time myself. So the high is made on the 382, right? That's fine. And if we take a fib time from here to here to here, that this wave 2 is about 2 times longer than wave 1, which is also fine. And in the bullish scenario, if we do this, and if we do this, and if we do this, your wave C is very short, 0.382. Well, that is noteworthy though. I want to keep that. Pum, 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 pum. No, it would be very short for a wave C in time though. The 2 is good in time compared to 1. This 2 is also already fine compared to 1. This wave C though is short in time compared to A. A, B. We'll get to that later. Okay, so we have the bearish scenario, 112. We have the bullish scenario, ABC. Now, what is the difference, everyone? What's the difference between the two? The difference is this. That's the difference. When to long Bitcoin? When your plan tells you to. Always have a plan. Always have a strategy. Right? So usually, of course, let me be a bit more specific here. When too long or when too short? First of all, it's a very bad idea. So I just give me 2 minutes here. I'll explain. I'll answer the question in a more educational manner. First of all, if you ask on online random live streams to go long or short, you let me know as a professional trader myself, an analyst, that you do not have a plan, you don't have a strategy, and the best thing that you can do, Hassan, is probably to remove all of your funds from any online account and stop trading until you follow the 6 steps that are coming up next. Follow these 6 steps and you have a high probability of becoming a consistently profitable trader. Crypto trading is not about get rich quick, it's about get rich slow, right? Building that portfolio. And once your portfolio is big, that's when it becomes get rich quick, you know what I mean? But you first need the skills. So step number 1, get your notebooks out. Step number 1, try as many free tools as you can in TradingView, right? Try the tools, test some indicators, try to get a feel of what you like and what you don't like. Because step 2 is find your favorite tools based on your experience and build statistics on them, right? Get your Excel sheet out and build statistics. Step number 3 is combine some of your favorite tools. So, hey, if you are an analyst and you like to use channels, you like the VWAP and you like the fixed range volume profile, right? And the statistics are good, you put them together. So if price hits the VWAP, the channel low and the value area low, right? You track more data. Step 4 is tweak and adjust. Add a tool to the combination, remove a tool, build more statistics. And step 5 is you start trading your strategy with a low amount of money, work on your trading psychology, check the book, right? Description, mental game of trading, by far the best. And step 6 is increase your portfolio slowly to get used to bigger losses, because getting used to bigger wins is easy, right? Trade management, never go above 5% risk per trade. I personally recommend sticking with 1% risk a trade. There's no reason to go above 3% risk per trade, which means portfolio risk, right? If your portfolio is 100K, don't risk more than 3K per trade, would be my advice. But I am not a financial advisor, just a random guy on the internet that shares what he loves to do. So, talk to a financial advisor. But I never risk more than 1% a trade. And build that strategy. Or Elliott Waves is a proven method, right? Where you can skip the part of tracking statistics and instead you go to Discord and you download this and you read this, because this is all the statistics you need to know about Elliott waves in bull markets, in bear markets. How often do we see flats in wave 2s or zigzags in wave 2s or 4s, and how often is a wave 3 extended, all that stuff. So you can skip the statistics part if you like Elliott waves. So I shared these files here, which hopefully are useful for some of you. So make sure to check it out. But if you do not have a plan or a strategy and you are random, right? You don't know what you're doing. You're emotional. Stop trading. Stop. Just stop, right? Maybe you've lost money yesterday. Maybe you've lost money today. And you're like, I want to make it back. Revenge trading. Stop it, right? Get the money out. You're going to lose even more and more and more and more. It's just a rabbit hole, man. So if you don't have a plan or a strategy, you are highly emotional. You look online on YouTube. If other people are long or short, you have no clue about someone else's plan or strat, just stop. First, make a plan. Make a plan. That's exactly what we do in Diamond, right? Of course, I know this is a membership, but just help people to develop a plan and work on their trading psychology. Make them patient, show them how I do my stuff. Please make a plan, right? Don't just, should I go long or short? Because that the moment you ask that question, I know you're never going to be profitable, right? People that don't ask that question, that's already a good growing curve. If you ask that question, I immediately know you're going to be losing forever unless you change your mindset. So that being said, let's continue with the analysis. So bearish scenario, 112 would be very bearish, because you're going to be easily moving towards 30, the high 30s minimum. Bullish scenario, finished ABC. The big difference in these scenarios is that in an ABC, you look for an impulse up, which means one of 3 structures on the 1 hour time frame, right? One of 3 structures on the 1 hour time frame. On the 1 hour, locally, you're going to be looking for either an impulse. Here we go, right? 1, 2, 3, 4, 5. Let me actually go to the 1 hour. Let's just check it out. All right? So you actually know. Pop, pop, pop. We know this is the invalidation of our wave C. Yeah? So in a bullish scenario, we need to see impulsive structures on the 1 hour time frame, which is one of 3. Either an impulse, 1, 2, 3, 4, 5. Get a corrective structure, 3-wave move, continuation. A multi 1, 2, 1, 2, 1, 2, wave 3. Or a leading diagonal, 1, 2, 3, 4, 5, usually a deeper corrective structure, continuation. If you cannot count one of these 3 with good confidence, or they're invalidated, you're going to be looking for the lows. So on a 1 hour time frame, can we count an impulse here? 1, 2, 3, 4, 5. Well, we do know that it is common for wave 3. By the way, this is a leading diagonal that ended here with a flat in wave 2, in case you're wondering why I pull the trend-based fib to this high here. So if we are looking for a impulse to the upside, then of course, preferably, your wave 3 extends to the 1.618. Let me quickly refresh the chart because my Ctrl Z is doing funny. Ooh, it's warm, yo. Yeah, I'm just using the spot to draw. Sometimes I need some space on the chart to show examples and stuff, you know. Okay, we back. There we go. So, of course, it's most common for wave 3 to extend to the 1.618. Well, clearly, we didn't reach the 1.618. But look at the size of this correction here, right? This correction cannot be a lower degree wave 4 of 3, meaning 1, 2, right? And then 1, 2, 3, 4, 5. It doesn't work, right? It's also already invalidated because we hit the 618 anyway, taken from the low to the high. So therefore, if we want to count this somewhat impulsive, it needs to be 3, 4, 5. But then your wave 3, right, only hit the 1-to-1. Now wave 3, the only rule of 3 is that a wave 3 is not allowed to be the shortest wave. It is longer than wave 1. So we can check that box. But it is not really something you generally like to see. So if we then take a fib from the low to the high of 3, toggle on the Fibonacci for a wave 4, then the common target area for your wave 4 is the 236 to the 05. Now we are currently at the 05 with the invalidation at 57.6K for a wave 4 closely below. Now guess what? That 0.618 is in the middle of that blue box, which is a great support area we have to the downside. Where do we have support now? Simply at the order block, right? So you can see we have this area. Ooh, arguably it's just a simple support resistance, but up, that's where we go. Do this, make it wide, right? So we currently are reaching some areas of support. I would personally like the blue box, to be honest, but I've got to wait and see. But if we do move to the blue box, then we are likely going to invalidate a wave 4, right? We are already very deep. So, okay, so that is an impulse to the upside, right? Then we have the double 1-2. So with an impulse, we know, right, 57.6, we don't want to hit that. But wave 3 is the same length as 1. It's not ideal. So then you have the double 1-2, of course, which is your most bullish scenario locally, not yet invalidated. This is your new invalidation. And then, of course, you have 1, 2, 1, 2 continuation to the upside. Common target for 2, fib from the low to the high of your blue wave 1. All right, common target, there we go, 05786, 05 currently hit. Golden pocket, guess what, is inside the box. Very nice, additional confluence, right? And then we have the 786. So your target is 58.6, 56.3. This box is important. Hit 55.5, probability is high to take the low. If we take this low, probability is high to eventually take the lower low. Right? So in a double 1-2, absolutely still possible, right? We want to see a big wave 3 to the upside. This is your most bullish scenario. Your invalidation is down here at 54.5K, right? Have a plan, have good risk management, and trading becomes a lot easier. Now, what is important is we want this move down to be a 3-wave structure, not a 5-wave structure. In other words, what we do not want to see is 1, 2, 3, 4, 5. We do not want to see a range having the same size here and another drop down, right? Because then we're going to have like a 5-wave structure to the downside, and then out of nowhere we could be counting 1, 2, 3s to the downside, or at least a bigger ABC. We are not there yet, but something you want to keep an eye on is this. Very simplistic. Take a fib from this high to the low. Which one is lower? Oh, the pivot here. If price is going to make new lows here on the very short term, just drag these fibs to the downside, right? From this high to wherever we're going to stabilize. And once we start building a range, right, leave the fibs on the chart, or this one, this fib, the 618. If price would make a low here and now starts to range and then move up, hits 60.5K, the probabilities are very high. This is a 3-wave structure, zigzag, ABC, and we're looking for the high, right? It's not about entering at the lows. It's not about entering at the highs. It's about entering when the probabilities are in your favor, right? 618, important, right? Now, if we do move down still, because we can have our A, B, and then 1, 2, 3, 4, 5, right? Then we pull our fib from this high to the low here, right? In the bullish scenario, that's going to be your 2. If price now moves up and hits 60.2K in this example, it invalidates and impulse down. Reason is A, B, C. This wave 4 is matching this wave 2 in an impulse. It's a lower degree, this might be tricky, lower degree wave 4, right? Wait, let me put this on the chart. 1, 2, 3, 4, 5. Let me make this simple here. Organize my stuff for a second. There we go. So this is your local impulse down, right? This is your local impulse down for A, B, C. There we go. Put this on 15-minute. There we go. So, right, this is bullish, by the way. In other words, 1, 2, 3, range in 4, one more drop in 5, hit the blue box, look for signs of strength, ranging up, grinding up, bit of retracement, bullish CVDs, up we go, right? Now, what you're looking for here is take a fib from, let's take this high here to the low. So preferably, we don't yet hit 59.8. If we do, probabilities are higher, you're going to look for the highs. So what we want to see now is a 1, 2, 3, 4, 5. Finish, therefore, our wave C. And what we do then is take the 618 from the high of B to the low of C. Wherever the 618 is, doesn't matter. The moment you then do this, 4, 5, poof. If you hit the 618, probabilities immediately increase to look for the highs. The moment you take out this high, the probabilities immediately increase to look for at least 65K minimum, right? Minimum at that moment in time. And that has to do with stuff I explained earlier today. But that would be a minimum target, okay? Now, the reason that 618 is important, FYI, is because your most bearish scenario is counting this as a 1, 2, 3, 4, 5. Now, how to distinguish between A, B, C, and 1, 2, 3, right? So here, we then have 1, 2, 3, ending at the same position as C. Inside the yellow 3, we have 1, 2, 3, 4, 5, right? But then after the yellow wave 3, you want to see another 4, another 5. And the length in time of this wave 4 should be similar to the length in 2 you had here, and then one more drop. That's not what we want to see if we're bullish. If we're bullish, we don't want this 4 and 5. Instead, we want this price action here to move up and hit the 618. Because the 618 is an invalidation for your wave 4 here. And that is why the probabilities switch bullish the moment we hit the 618. Can I look at ETH? Not on this stream, but if you go to my YouTube channel and scroll down. I've done a analysis on ETH, Solana, Link, XRP, and ADA earlier today, Cardano, which you will see over here, right? 6 hours ago, I forgot to put the things in, but just go to the recent one. Timestamps are in already. It's just not in the title. ETH, Solana, Link, XRP, ADA, done in this live stream. So that is why the 618 is important, right? So a 112 is definitely still a possibility on the chart, which of course is your most bullish scenario, but that means you do want to see a 3-wave structure down, which is what I've just spoken about. No, so we know exactly what to look for. And I am, first of all, a very patient trader, right? So I'm more like a day/swing type of guy. But I trade probabilities. So I'm very patient. I wait for the reaction. I wait for ranges to form. I wait for invalidations to be hit. And then I take action. No? But at least we know that a multi 1-2, 1-2, 1-2 is possible. And look for 3. Invalidation, very clear. If you have solid risk management and you just risk 1% a trade and 1, okay, yeah, interesting. I'm looking for a big wave 3, stop loss down here. That's my invalidation. If I go down, I lose 1%. And who cares? If you lose your trade here, your idea was wrong. You lose 1% on to the next one, right? Doesn't matter. It's just 1%. As long as you're more often right than wrong, right? In your own analysis, your own trading plan, it's perfectly fine, right? You should be able to handle those type of things. And then we have a diagonal, but for a diagonal, it's too early. 1, 2, 3, 4, 5. It's way too early to talk diagonals. We need a wave 4 to finish. Your bearish scenario is A, B, C. And then you want to move down. 1, 2, 3, 4, 5, and down we go. You want to change market structure. Alternative bearish scenario, W, X, Y, double zigzag. A, B, C, A, B, C, A, B, C, and move down. But then again, the important target area is 65 to 68K for the bears, and preferably for the bulls you continue. Okay, so that is the difference on a daily, we go back to the daily. This is how things mold together, right? I mean, yeah, I love Elliott waves. So on the daily, we have the bullish scenario, we have the bearish scenario, and the difference between the two now is actually, interestingly enough, this piece of price action, right? Now, based on probabilities, at the moment, your bullish scenario would have a higher probability because for a wave B, hitting the 886, as explained earlier, taken from the high to the low, is perfectly fine for B. And the 886 is rare, remains rare, right, for a wave 2. Now, it is a target for a wave 2, right? So wave 2, of course, is complex. Doesn't matter. Wave 2 still hit the 886. It's still a target for a wave 2. It's just a lot less common for 2 to hit an 886 compared to a B to hit the 886. So preferably you look for ABC compared to 1 to 1-2, which supports bullish scenarios on the weekly time frame. How often do you trade? Daily, hourly, weekly? My entries tend to be on the 15-minute time frame, and my positions are generally longer than 1 day. And I trade both day trading and swing trading. Day trading is not trading every day. It's a few times per week. And swing trading is, depends on the swing. It can be once a week, once a month. So yeah, yeah. I see many. I would recommend to watch the analysis, but let me finish the analysis and then answer a few questions, and then my ass is going to bed. So yeah, cool. Okay. So we have a finished ABC, and we have the 112. Now there is only one more structure we want to check, just in case. So we have checked a diagonal over here. Can we count a diagonal here, by the way? That would be expanding. If we do, right? So if we do count a diagonal here, it would be an expanding diagonal. Look at the trend lines. An expanding diagonal is very rare and never preferred unless all the other scenarios fail. In other words, not cool. Impulse already covered. Multi 1-2 would pretty much be your only bearish scenario to the downside. Okay, so your bearish scenario, highest probability bearish scenario is a double 1-2, right? Your highest probability bearish scenario, based on what we have done so far, please pay attention. Your highest probability bullish scenario is your ABC. But out of all the Elliott Wave scenarios there are, we still have to at least check a WXY. We have covered the ABC. We know that a flat doesn't work, A, B, C in a flat, because B didn't hit the 0.9. Triangles cannot be counted here, because in every case, your wave C moves below your wave A, which is not allowed, right? Which then leaves us with the zigzag A, B, C, and a potential WXY. Let's check the WXY. So, and that is then the end. And then, ta-da, we finished with the analysis going from a completely fresh, new, like no analysis here, to having a full Elliott Wave plan with 2, potentially 3 scenarios, including probabilities, plus knowing what we're looking for. We know our validations, we know potential targets, we know areas of support, we know what to look for, everything. How did you learn trading? By myself. Yeah, I just studying. Everything you need to know is online. But I learned Elliott Waves by myself, and trading as well. Everything you need to know is for free. So, okay, let's finalize this and then answer questions. So, okay, WXY. Now, in a WXY, we're looking for a complex structure, right? These are the most complex structures you can get in Elliott Waves. Tends to be quite tricky as well, especially if you're starting out. Once you get the hang of the simple structures, zigzag, flat, triangle, zigzag, flat, triangle, that's when the WXYs are next in your learning list, right? So generally a WXY comes last. So in a WXY, you have to know that your wave W can only be a zigzag or a flat. Wave X can be any corrective structure, but is most commonly a zigzag. So wave X can be anything, but is most commonly a zigzag or a zigzag family structure. And your wave Y can be here. Your wave Y can be a zigzag, can be a flat, or a triangle. Now, important to know is that if wave W is a zigzag, wave Y cannot be a zigzag and has to be a flat or a triangle in a sideways WXY. I don't want to make it too complex, but I have to say it. A sharp WXY is a double zigzag. A, B, C, correction, A, B, C. In this case, your W and Y are zigzags, but this is a sharp corrective structure, not a sideways corrective structure. What we look for at the chart at the moment, right? Look how sideways this is. We're not looking for double zigzags here, right? And also in a double zigzag, which is again W, X, Y, you do not want to see your wave X move above the 0.7. This is not a hard rule in Elliott Waves, it's a probability guideline. If you hit the 0.7 with your wave X, probabilities go down for a sharp double zigzag WXY. Now in this case, we have hit the 0.7, probabilities here are low for a double zigzag. So, just that at least I've said it. So the moment W is a zigzag, wave Y cannot be a zigzag and has to be a flat or a triangle in a sideways double combo. Control Z, Control Z. Oh. Okay, there we go. Right? So that is something to remember. Look, questions like, do you think, right? Do you think? Yeah, I mean, of course. You can also reach 1, right? You can go back to 10K Bitcoin. There's never 100 or 10, like 100% or whatever, but it's probabilities. Do I think it's possible to see 44K? that's not important. What is important is, are the probabilities higher to see 44K? And that is something you'll have to figure out on either your analysis or by looking my analysis if you're interested in Elliott waves, which is something that I've literally been doing the whole night to educate you as well. If you want the short form content, like if you like to see a 10-minute update, then go to the previous video on my channel. But I will only cover the probabilities at the end, right? So let's first get through the WXY. So if we look at a WXY, we need a W, X, and a Y. And wave W can only be a zigzag or a flat, meaning if this here is not a flat, it's a zigzag if we look for a WXY. Now this can only be a flat if wave B goes to the 0.9. So we take a fib from the high to the low here. And we check, did we touch the 0.9 here? Yes, we did. Okay, interesting. We hit the minimum target for wave B, and then we need a wave C to the downside. But we already know that if this is a 1, 2, 3, 4, 5, that your wave 4 is either 6 times longer in time compared to your short wave 2, which is incredibly uncommon, or your wave 4 hit the 618, which is invalidated. So preferably your wave C and then A, B, C ends here. So that is preferably our W, right? Then we need an X, and a wave X is then a 3-wave corrective structure where this low becomes your B, or an internal X, right? WXY or ABC, right? So knowing that inside X, we're therefore looking for a flat or an internal WXY. But there you go again. If you look for a WXY, you need a sideways WXY. WXY finishing here or finishing here, it doesn't really matter because your wave X is going to finish at one of these highs. So in other words, we need X to finish here to start with. But then we need a wave Y. And we know that wave Y can only be a zigzag, zigzag, flat, or a triangle. But because, a zigzag, flat, or a triangle. Wave W is not a zigzag, right? Can be, but it doesn't have to be, because there's the possibility for a flat in wave W. So it opens the door for a zigzag in Y. So in other words, because wave W has the possibility of being a flat, of course, it can also be a zigzag, but because it has the possibility of being a flat, because the 09 is hit, we cannot disregard wave Y to be a zigzag. So wave Y can be zigzag, flat, or triangle. Now, if this is the end of your X, you're then looking for A, B, C in a wave Y. Now, we know that preferably, if this is a wave C, the low is in. So in a WXY, according to what we see here on the chart, preferably you have the same low that is in with a WXY with then a zigzag in your Y. Flat, X, zigzag. WXY. Alternatively, because, right, if we have a scenario, right, we have the ABC here, this is your bullish scenario, ABC. If we have a scenario being the WXY that ends at the same low, it's not really adding much to our analysis, right? I don't have to show an ABC and a WXY just because WXY just because it's different letters on the chart if the low is the same, right? So in other words, if we put W here and X here and Y here, it's not relevant for me to show that to anyone, right? I prefer the ABC. Why? An ABC is a simple structure, right? It's a zigzag. And an ABC, if you would compare an ABC zigzag against a WXY, your ABC will always have higher probabilities because an ABC is a simple structure, right? It's one of the core structures in Elliott waves. The WXY is a complex structure. It is less common. So an ABC always wins over a WXY if you have the same low. However, right? Are we done with analyzing with the WXY? No, not really. Because if we put W here And imagine putting X there and then a wave Y. Then what, right? We have to at least think about it, because we can count A, B, and then C. Well, can we also put X over here? If we can, this is why it's important. If we can put wave X here, wave Y can be either a zigzag A, B, C, or we can still look for a triangle, which means we continue this range for a longer period of time and then move up. Which means this move up can be ABC, 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 pop, and then eventually up. So we have to at least consider it, minimum. So let me put the official stuff on the chart. So then we have our W, we have our X, we have our Y. Okay, can we finish X here? Well, we know based on the wave B analysis that, okay, well, we could have a bit of a flat here. We know that W has to finish here. Right, so we can't have maybe you with A, B, C, A. Yeah, you can have a running flat here as well. Flat X zigzag, flat X impulse, running flat A, B, C. C didn't take the high of A, running flat, very rare. Right? Or you're going to be looking for flat X flat. Now, in this case, you have an internal W, X, Y. W is a flat, X is then a zigzag, and Y is a flat. Now, rule of alternation would generally suggest that your wave W and Y are different structures and not the same structures, but it's not an invalidation, right? It's not an invalidation. So, okay, there is an argument for a wave X, for a wave X at this high, right? Now, with that in mind, let's check the targets for Y. We take a trend-based fib, trend-based fib from the start to the end of your W to the end of your X, and we toggle on the 1 to the 1.236 and also the 1.618, because that's a rare target. We remove the 0.618. It's a common target, but it's already passed, so it doesn't really add any value to my chart. It's only clutter, and we don't like clutter, right? So we do this. So your most common target for your wave Y is between the 1 and the 1.236 trend-based fib extension from the start to the end of W to the end of X, which, as you can see, is hit. Interesting, because we also know that the common target area for an ABC is the 1 to the 1.236 as well, which is pretty much in the same area, right? It is this one, make it yellow, right? So the 1 to the 1.236 here is your common target area for C. This is your common target area for Y. There's a little bit of confluence here, isn't there? Right? Makes it interesting. Now, what is also interesting is that we have hit the most common target area for Y. And we know that wave Y has to be a three-wave structure. W can be a flat. We can have a potential zigzag in here, which is finished at the low. The thing is, it doesn't really matter again, right? We can have a flat in W, X, and then a finish wave Y here with a zigzag, sharp zigzag down. But it's again going to be the same low as we already have with ABC. So I would prefer putting the ABC instead of a WXY. Which means that the alternative for a wave Y becomes either A, B, C now, or a triangle. Now, the rare target for C, the rare target, uncommon rare target for Y is the 1.618. If we are looking in wave Y for an A, B, C to the downside, where C has to move below wave A, the chance is very high. You're going to reach the 1.618 at about 47. But that is a rare target for a wave Y, not preferred. If I take a trend-based fib from the start to the end of A to the end of B, toggle on, let me quickly put this on the chart for you. Not everyone might be able to follow. A, B, C, put this, do this, right? So if wave Y would be an unfinished zigzag, your wave Y rare target is the 1.618. But look, just for a second, look how high your wave B has to go for the 1-to-1 to be at the 1.618. You're like this move up, this current move up. Let me do this, by the way, just for the sake of full clarity. Your current retracement up here needs to move to pretty much 68K to have the 1-to-1 common target for wave C, generally a minimum target for C, on top of the 1.618, which is a rare target for Y. Any retracement lower than 68K is going to significantly move the wave C common target area below the 1.618, meaning there is no clear confluence anymore between your wave Y target area and your wave C target for a zigzag in an ABC in Y, right? So in other words, preferably, even in this bearish scenario here, bearish because you expect another low, either in this particular scenario, you preferably look for price to move up higher to at least 65, 66, 68K, so that this 1-to-1 is getting at least a bit closer to the 1.618, which already is a rare target. But you can see that an unfinished zigzag ABC inside a wave Y is not preferred, because your target for C, your common target for C, being the 1 to the 1.236, is below the 1.618 as long as we don't hit 68K. Right? It's a lot of information, but hopefully you follow it. So it's not too great. It's not too great. And that then leaves us at least with the potential for a triangle. Of course, I told you we could also have a flat A, B, C. But the problem with a flat is that your wave C most commonly goes below A, which again means the 1.618. So that is why triangle. Right? Up, and then we have A, B, and then preferably actually, oh well, we can also just have a triangle here. Who cares? Now, a triangle is not the most common structure in a wave Y. Wave Y is most commonly a zigzag or a flat compared to a triangle. But when we look at a WXY, preferably your scenario would be a triangle, just so that your wave A is finished inside the common target area for wave Y. Now wave B most commonly is a simple zigzag. Then you get your C, D, and your E. Make this white. Make this white, turn this to the left. We gotta organize the chart a little. So, all right, A, B, C, D, and then eventually E. Beautiful. So, there we go. Okay. So most commonly, as explained earlier with triangles, right? Most commonly, this is a must, 4 out of the 5 waves have to be a zigzag structure, simple zigzag, A, B, C, up or down. If one of the waves in a triangle is not simple, meaning, again, 5, 3, 5, zigzag, up or down, it tends to be wave C, being a double or triple. And then D, E, up, right? So preferably your wave A is a simple zigzag, B is a simple zigzag, then you have your C, D, E, and off we go, right? But you can see that in this scenario, preferably, guess what? Your low is in. Right? And this scenario would at the moment have higher probabilities, really, than an A, B, C to move below A and hit the rare target for wave Y. And even if so, preferably, you first move to 68K, so the 1-to-1 is at the same level as the 1.618. We're not at 68K, we're at 58.9K. And the high here was at 63K, so we're not close. So with our wave Y here, we either want to see price move up to 68K, but that's perfectly fine because we're looking for that anyway, or we look for this triangle, but that means again your low is in. It's just probabilities. And then we look for A, B, C, D, E, higher, low, higher, low, higher, low. All of the waves, 3 wave structures, 3, 3, 3, 3, 3, and on we go, right? Continuation to the upside. Bull market, 100K next, to the moon. So let me put this in my folder. Make a new folder, it seems, and call this daily. So with regards to a WXY, we either want to see 68K or we want to see this triangle. Now let's summarize the probabilities and what to look for, because now we're done. We have done a complete new analysis on the chart, full public, with all the rules, all the guidelines, showing you step by step how to go from absolutely zero over here to having a full Elliott Wave plan, right? And now we talk about probabilities, because having a plan is one, but you got to know the probabilities as well. Now you can get to the probabilities based on what I've said everywhere, but let's compare, right? You got to compare your scenarios. Okay, we have two bullish scenarios, right? Scenario 1, A, B, C, low is in. We look for an impulsive structure on the lower time frame, either 1, 2, 3, 4, 5, or 1, 2, 1, 2, continuation up in wave 3. Somewhere in the middle of the stream, I shortly explained what I'm looking for locally, but yeah. So that is number 1. Number 2 is the WXY, but even here, preferably, based on probabilities, your low is in, because your common target area for Y is hit. Your common target area for C is also hit. All right, the 1 to the 1.236. So preferably in even a WXY, unfinished corrective structure, your low is in. And you are looking for a WX triangle in your wave Y, A, B, C, D, E, up. All right? Your invalidation, by the way, for the triangle is either already moving above here or below here. So there's two, officially there's two invalidations. Continuation of the range. All right? Only in the bearish scenario, where we are looking for a 112, would we take the low here, which of course would be very bearish, really. So at the moment, when we look at the probabilities, right, a 112 is arguably almost your only scenario to take out the low. The only alternative would be a WXY, where we preferably first move higher before taking the low again and hit the 1.618 and then move up. But it's not great, because the 1.618 is rare for Y. So therefore, if you do take this low, the probabilities are higher to go low, right? Like actual, like deep to the downside. However, on a weekly time frame, as well as on the daily, the probabilities at the moment are higher for the bullish scenarios, right? And I don't care if it's an ABC or a WXY. By all means, in both cases, your low would be in. At the moment, the probabilities, just based on what we've done, you can watch the whole live stream, which is going to be an enjoyable 2.5 hours. Based on everything I've done, the probabilities from an Elliott Wave point of view are higher for an ABC or the WXY. I don't really care, but generally an ABC, simple structures, have higher probabilities than WXYs. Yeah. So something to keep in mind. So therefore, your ABC would be on 1, WXY would be on 2, and the bearish scenario would be on your third position. In other words, your probabilities would be higher for the low is in, the low is in, the low is not yet in. But if you take the low here, you're going to move back into the 30s, pretty much. Right? Then you're going to start like bear market stuff. The reason the probabilities are lower for the 112 has to do with the 886 that we have touched here. Yeah? So the 886 is rare for 2, common for B, or wave X. Now after a diagonal, yes, we do like to see a sharp correction in a wave 2, a deep one, but still rare for a wave 2. So no, it's just the way it is. No? So we just use Elliott waves and the theory, because I personally don't care if price goes to 100K or to 30K, right? Oh, 30K, more Bitcoin, right? 100K, more profit. No, I really do not mind. I'm not a I'm a trader first and foremost, and I can trade at 30K, I can trade at 100K, at 10K, at 500K. I don't care. Probabilities are never 100%, so it's always about solid risk management. If price would hit 49K, right, you should not lose your whole portfolio, your house, and your whatever, right? Like, be smart. And also NFA, no financial advice with anything I'm talking here. As you know, we're on YouTube, not in a bank. So that is the probabilities on the daily time frame based on a analysis of about 2 hours. Now, let me shortly repeat what to look for locally, and then I'm going to bed as well. Because wifey is already in bed, and yeah, I'll eventually have to follow. So locally here, isn't it like midnight? Yeah, it is. It's currently midnight. It's literally like 2 minutes away from midnight. No, the 886 doesn't mean taking out the high before the low. The 886 means probabilities are higher to still take the high. Because the 886 is still a common target for a wave B. And if it's a common target for B, you want your wave C to move below A. So if the 886 is a wave B, it's no problem. You look for C, take the low of A, and then later move up. But the moment you hit an 886, probabilities are higher to still take out that high. So locally, what are we looking for here? Right? Keep in mind probabilities. I shortly explained it in the middle of the live stream. I just want to make sure I summarize it at the end of the live stream. Also makes it easy for my timestamp. So we put an invalidation here because we know that if this low here is a wave C, ABC, finished, we want to see a move up. By the way, the question about counting wave C in detail, it's irrelevant. It's either wave C or WXY, but this move to the downside, right? 1, 2, 3, 4, 5, right? Extended 5 or whatever. If this is ABC, it doesn't really fit in any scenario. So it's something I can look at in a second, but it's not really relevant. So if you want to count this as an ABC, that's fine. But if this is an ABC, you're finishing wave Y in a WXY, and your low is going to be the same. So it doesn't matter. It's still going to be the same low. So that is why I just prefer ABC, because ABCs are simple structures and are generally a bit more common. So, yeah. By the way, from that regard, right? W, X, and then A, B, C, D, E, big triangle up. That's also still a possibility, but then your low is still in, and that's what we are looking for. No, is the low in or is it not in? So yeah. So even if this move down is a zigzag, you're going to be looking into triangles or a finished wave Y at the low, or you're going to be looking for A, B, C, D, E, and then move up. So locally, just to keep things simple, if this is your low, right, and we are looking for wave C, and we look for impulsive continuation to the upside, right, the moment we see three waves, three, right, 3, W, X, Y, 3, we think about triangles, right? But at the moment, it's too early to call triangles. Because if we look for a triangle, A, B, C, D, E, I always, 1 second here, A, B, C, D, E, and then move up. I always want to wait for at least a wave D to be in, and we're not even close to wave D's, right? So it's too early to call for triangles. Yo, Hakim, als jij gewoon even net 5 minuten geleden had geluisterd, dan weet je precies de probabilities, kerel. Yo. Zeg gewoon wat het meest waarschijnlijk is, A, B, merci. So I really hate those guys. Like, if you just pay attention, right? Highest probability, second highest probability, last probability. There you go. So we go to the 1 hour time frame, right? And on the 1 hour, if that is your low, right? Over here, low of your C. If you are looking for an impulse up, there's only one of three structures. As always, it is going to be, let me keep this. It's going to be an impulse, it's going to be a diagonal, or a double 1-2. Move the mic a bit, sorry. Ik was er niet 5 minuten geleden, man. Dan kun je toch ook op een normale manier vragen wat de probabilities zijn. Like, respect is one here. Please give, zeg gewoon wat het meest waarschijnlijk is. It's so cutthroat. Like, just, could you please repeat? I missed your analysis. Could you please repeat what the probabilities are? And I'm happy to give it. But if I read comments with you get the same type of comment back. So anyway, impulse, diagonal, or a double 1-2. If we count an impulse here, 1, 2, 3, we need a 4 and a 5. Now you can see your wave 3 is relatively short, right? 1, 2, 3, 4, and there we go, 5. Your wave 1, by the way, goes up here with a flat in wave 2, no? Now your wave 3 is most commonly extended. Take a trend-based fib from the start to the end of 1 to the end of 2. Wave 3 is most commonly extended, meaning the 1.618 is oftentimes a minimum target for your wave 3. Clearly, we didn't hit the 1.618, right? So we toggle on the 1-to-1. Hey, we did hit the 1-to-1. Now, a minimum rule for wave 3 is that a wave 3 is not allowed to be the shortest wave, but it isn't, right? So it's not allowed to be the shortest between 1, 3, and 5. So that is something, right? No problem, Hakim. No problem. Maar ik ben Nederlands, er zijn veel Nederlanders hier. But I always really value respect. But no problem. If you have questions, just let me know. But so 1, 2, 3, wave 3, same length as wave 1, is not really what we like to see if we are looking for an impulse. If we look for a wave 4, we take a fib from the low of 2 to the high of 3. Toggle on the wave 4 targets, and you can see we're at the 0.5. Invalidation for 4 is 57.6. It's just below price at the moment, right? We don't want to hit 57.6 for an impulse 1, 2, 3, 4, 5. Are we then finished, right? If we hit 57.6, is it then? No, it's not low, right? There's one more bullish scenario. So we know the invalidation for wave 4 is 57.6. We are close. And we also know that wave 3 preferably extends, but it didn't. So the probabilities for a simple impulse up here, it's not too great. The probabilities would arguably be a bit higher for a double 1-2, which actually is more bullish. So in this case, what you're looking for is a wave 1-2, 1-2 continuation up in a wave 3. Now, there's definitely something to say, by the way, about this double 1-2, which is that your lower degree wave 2 in blue is a lot bigger in time compared to your higher degree wave 2. Sometimes the way it is not an invalidation, but it does impact the probabilities a bit. So here we then have a wave 1, 2, 1, 2. You look for continuation up. Now, what to look out for? Your invalidation, first of all, is this low. Now, let's make trading 101, right? Let's make it very, very simple. If this is a wave 2 to the downside, first of all, you want to see a 3-wave structure down, not a 5-wave structure. What does it mean? In this wave 2, we don't want to see 1, 2, 3, 4, 5. Okay? We want to see A, B, C. Continuation, right? Now let me explain this in a bit more detail. Okay? So I'm going to remove the clutter from my chart. This is what we're looking for. Give me a little bit of time to put the art on the chart. So this is your bullish scenario. This is your bearish scenario. What's the difference? I'll tell you in a second. And then finally, 1, 2, 3, 4, 5. Ooh. What just, oh, out of, what the, okay. Whoa, shock. Okay, 1, 2, 3, 4, one more low in 5, 3, C, 4, 5. Okay. What do we like to see? The blue count. Now in blue, we then have a diagonal A, B, 1, 2, 3, 4, 5 wave down in wave C. Now if price would right now, with the current low we have on the chart, move up to 59.8K, it invalidates wave 4, probability is higher to move up. I would say preferably actually price makes another low. And the reason is, if we look for an impulse, 1, 2, 3, 4, 5, highest volume currently in your wave 3, that is what we like to see in an impulse. Target area, support box is below us, which would be great to end a wave 5, right? So that's nice. Nice bit of confluence between Elliott waves and horizontal levels. But this is where things become important. In a bullish scenario where, remember, we look for a double 1, 2, right? We want to count A, B, wave C is a 5 wave structure. 1, 2, 3, 4, 5. After wave C, we want to hit the 0.618 Fibonacci taken from the high of B to wherever the low of C is going to be. So we don't know where it's going to be. We first need to wait for a bit of a local range, small range, right? Move down again, hit the box, finish a 5, then move up, right? That is going to be the low of your Fib taken from this high to wherever the low is, right? And then you take the 0.618, and the moment we move up and hit the 0.618, the probabilities are higher to sooner or later take the high immediately, right? So the moment you hit the 0.618 taken from the high to the end of your 5, the probabilities are high to take out the high. Now, I personally don't care about catching the low, catching knives. I trade probabilities, right? So this is a big probability changer. Doesn't mean, I just want to hear, quote unquote, that it is a straight line, right? It rarely ever is a straight line in trading, right? But A, B, C, touch the 0.618 after, probability is high to take out the high. Your bearish scenario is then going to change the moment you hit the 0.618, by the way. 1, 2, 3, 4, 5, move up and touch the 618. Your bullish scenario is going to be continuation. Your bearish scenario is going to be W, X, Y, a bigger corrective structure, and up after. So it is still up, but just a continuation of the range first, right? Just FYI, that is how scenarios change as we get more information. We don't have the info yet because we first need to wait for a 4, then I get a 5, then hit the 618, and then we either look for continuation or we look for W, X, Y, another leg, and then, you know. But by all means, the moment you move up and hit the 618, we're going to be looking for this high. Take out this high. Your minimum target would be 65K to 68K, right? This is your bullish scenario. In your bearish, more bearish, I mean, don't think about bearish being immediately like, oh, 10K, but your more bearish scenario is an impulse down. 1, 2, 3, 4, 5, meaning your wave 4 is going to be similar in size compared to your wave 2. Commonly, wave 4 in time is a little bit bigger than your wave 2, something to keep in mind, right? So if you move down 1, 2, 3, 4, 5, finish a wave 3, you want to see a wave 4, a bigger sideways range, one more drop in 5, where wave 4, the range should be similar compared to 2, and then one more drop down in 5. The moment this happens, this becomes a 5-wave impulse, and a 5-wave impulse is never alone. So now this 5-wave move down has to be counted as either a wave 1 or a wave A for a 3-wave correction in a wave B or a wave 2, and then continuation down in a wave C, bullish, or a wave 3, bearish. Too early to call, we don't have the information, right? But I'm preparing you on what's to come. So in other words, what I want you to focus on short term is the following. The first focus now, short term, is 59.8. If price does that, hits 59.8, probabilities are higher to, sooner or later, take out this high. Now, I think probabilities, like at the moment, based on a local structure down, is higher to still take this low one more time, right? We have a support box below as well. Just like, look, we were looking for price to hit this box as well, and a continuation of the weekend range. I mean, that worked out pretty nicely. I would like this box to be hit. We have the highest amount of volume at the moment in the latest move down. So preferably, you're then looking for 1, 2, 3. 3 has most commonly the highest amount of volume in an impulse. 1, 2, 3, highest volume, look for 4, look for 5, hit the support, wait for a range to form, potentially more confirmation, then pull the 618 from the high of B to the low of wherever, I say high of B, but from this high to wherever this low is going to be before you start ranging. And this level of the 618 is going to be your confirmation of probabilities immediately increasing to sooner or later take out this high. And I don't care if that's going to be 1, 2, 3 continuation, or if that is going to be a WXY continuation. It's going to be immediately probabilities to the side of taking out the high. The only most bearish scenario would be 1, 2, 1, 2, impulsive continuation down, right? But that is stuff we talk about later. That is at the moment, based on the daily time frame, not a high probability. Remember what we spoke about on the daily, right? The multi 1, 2 not having the greatest probabilities. It comes back on the 1 hour. So the daily time frame comes back on the 1 hour at the moment. So what we need to wait for, sensibly, is a range to form. I have no interest in longing this. I wait for price to range, structure. I want to see a grind. I want to see bullish market, like an impulse diagonal or a double 1, 2. What I preferably, to make it very simple, look for is preferably we hit support, start a range, a bit of a grind to the upside. And I like to see bullish CVD divergences building as price moves up. As long as price is doing this and down and this and down, I'm not interested, yo. I'm just looking for lower. I'm in the short, me happy. No problem. But I do know this is good support. So obviously I have a TP and then we'll see. No. So, I mean, the trade is already risk-free. So nothing to complain there. But this is what we're looking for locally, right? The moment you get your 4, preferably another 5, hit support, take a fib from the high to the low, turn on the 618, the rest is irrelevant. The moment you hit the 618, probability is higher to take the high. The most bearish scenario once you hit the 618 would be a 1, 2, 1, 2, big 3 down. But based on daily analysis, that's not highest probability. So your probabilities would be A, B, C and move up, or WXY and move up. Higher probabilities compared to a 1, 2, 1, 2 and continuation down. And there you go. That is what we're looking for. I know that I haven't been too active in chat. Generally, if you're new here, I'm actually always very chatting in Q&A after the analysis. But in this live stream, it's been a bit less chatting with chat. Sorry about that and all the questions. But commonly what we do in live streams is in the beginning, the first 15 minutes, I always say hi and, we chat. Then I go into the analysis. And during the analysis, I just focus, and it's not so long as now. Generally, the analysis in live streams is like 15 minutes or something like that. Just like pretty much like the videos on my channel. And then after the analysis, we go in chatting and Q&A, where I put on this, and we just chat till eventually I decide to end the live stream. The box coordinates, yeah, so the box here, there you go, it's here. So that is how we usually do it. The reason that this live stream, first of all, is very long, and also second, why this live stream has been less interactive for me with you guys, so sorry about that, but is because what we've done here is create a full Elliott Wave plan from nothing on the chart, right, in this range, from absolutely nothing to having a full Elliott Wave plan with probabilities, invalidations, how probabilities change, you know, the full thing. And because I wanted to make it very educational, so hopefully people learn a thing or two, I showed you the exact thinking process of how to invalidate certain counts, how counts change from having a wave B here to then having a wave B here to make this your wave C, and you know, so it's been very much process focused, and therefore it took me a while to get through it all. But here we are after 2 hours and 50 minutes. So you could call this a master class in Elliott Wave counting, if you will. I probably have to save this video for people that like to learn. Maybe I have to change the title or put it in my educational playlist. I think that's what I'm gonna do. I'm gonna put this video in my educational playlist as well. And I'm gonna call it Empty Chart to Full Elliott Wave Plan 2.0. Yeah, I think that's what I'm gonna do. Because the first one I have here, which one was it? This one. This one is on, I think on a, I don't know if it was a stock or some other Forex chart. But now I have this video, but I pretty much did it on Bitcoin, which is nice. So I can put it in the educational after you get some sleep. Yeah, cheers, man. Maybe Band-Aid. So, man, I feel like a workout. So everyone, yo, hope you like that. How do you interpret the between the CVD lines of buy and blue line, which happens often? I actually recently shared a few tips in Discord, but just very short. The yellow and the blue line of CVD are of same importance, but if they do counter one another, you need to know a few things. One, the first CVD with a new pivot is always the best. So if you get with the same pivot, right? So if you make a high, right, and then you grind down and down and down and down, and then you get this, right? If you get a first bearish CVD here that plays out, and then a second, and then a third with the same high, and then eventually a fourth, the first one has the highest probabilities of playing out, and all the others have starts to become lower probabilities of playing out. The fourth CVD here is not even interesting anymore. I would only look at new local CVDs, and a great example is what we had on the 15. So I was long earlier today because we moved up with bullish CVDs, was nice, hit resistance. We had the bigger bearish CVDs here, but there was a fourth. We had the first, we had the second, we had already 3 CVDs playing out with this high. This was the fourth one, and as in the video I mentioned this morning that I'm not interested in a bearish CVD unless locally here after hitting resistance, which is this box, we see local bearish CVD, which we did. So that is tip number 1. The more CVDs with the same pivot, the lower the probabilities, right? And then you have to look more local. 2, CVD divergences after a swing failure pattern are less reliable. And I talk about CVD with structure on the left. If you have this and that and this and that, and then you make a high, right? And then you do this. No, wait. Wait, I need to do this, 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 this. And if you swing failure pattern this high, right? CVD divergences with this low, higher low in price, lower low CVD, bullish CVD, lower probabilities, is less reliable. Instead, what you want to see is after the potential move down of the swing failure pattern, you want price to stabilize and create brand new bullish CVDs to look up. CVDs with the previous range, less relevant, right? That's not what you want to look for. So that is tip number 2. What was the third tip I had again? This is, by the way, all based on months and months and months of data collection. So what I'm giving you here, these tips, has literally been months of work. Just so you know the value of what I'm sharing. I have a shitload of statistics in my Excel sheet. So that's tip number 1 and tip number 2. What's the third one again? After a swing failure pattern. Oh yeah. And if you move down very impulsively on high volume, right? The next range forming, if you get bullish CVDs here with the very high volume low and potential range, less reliable, right? Less reliable. These bullish CVDs play out if you have a very high volume low. What you want to preferably look for is first wait for structure up and then trade the bullish CVDs that come later, but not with the low, right? Okay, there you go. So those are 3 tips. And lastly, just train your eyes. Train your eyes. You need experience with CVD. Context is important. If they are countering, right? If you have yellow and blue countering, first of all, you need to know what I know. Second, right? These type of tips, because it can help you distinguish the probabilities of the yellow versus the blue line. And lastly, you just got to train your eyes, right? You gotta see the patterns. You got to see the divergences. It's a matter of time, right? Pleasure everyone. Thanks for the heartwarming comments, man. Yeah, definitely need some sleep. I gotta say I'm sweating, man. Like holy shit. So since I live in the south of France, sure, every live stream has been a workout itself. If I go, I let 1 second. She's watching something. I don't know what, but she's watching something. Is Biddy your mistress? Yeah, I guess. Okay, guys, it's gonna be sleep time. Yo, what's up, Barbie? Whoa. Okay, it's past midnight. It is 12:30 in France, south of France here, Central European time. Tomorrow morning is going to be another Bitcoin update. So let's see if by then price actually moved down into the support area that we are looking for. Would be nice. So just a final FYI. Let's see if price actually hits it, yes or no. We'll see if I wake up in the morning. And if you don't know, every day, morning video, afternoon live stream, evening will be video or live stream, most often a video, today live stream. And in the weekends it's random because I then like to do stuff with my wife. Generally in the weekend it's at least one thing a day, and on Sunday is always altcoin streams. So Sunday is altcoin live streams, and tomorrow morning will be a normal video update. Videos generally are about 10 minutes in time. The live streams, we start with chatting, then analysis, and then I answer questions the rest of the live stream till eventually I stop, and then evening is video. So yeah, welcome to the channel. In case this is your first time. So thanks for being here. Thank you, Crowd Performance, everyone. Thanks for the great messages. I appreciate it, guys. We have inflation. Lower numbers, 1-to-1 to likely. No, Elliott Waves is actually not including market news. If you would learn, so if you would, for example, Viable, go to Elliott Wave International or just read the book, Elliott Wave Principle, Frost and Prechter, then you will see that it is a theory not based on news, but it is based on psychology. And that makes it interesting. So, yeah, I'm a technical analyst myself. I do know fundamentals. Absolutely, they can work, right? I mean, I always say there is no strategy that can't work. I think you should respect everyone's strategy. Doesn't matter if you're fundamental, tech, or both. I don't care if you're technical, trend lines, patterns, or order flow DOM, or Elliott waves, right? You should respect anyone's form of analysis as long as it works. So I don't really focus on fundamentals at all. I'm 100% technical. That works for me. But if someone here is fundamental, I very much appreciate your work. As long as you're profitable, you're doing good. Do you do private teaching? Not yet, but I get many questions. So I do have it in a list of to-dos to try and see, because if I do private teaching, I want to have a full program. I don't just want to wing it. So I want to prepare a full thing that is more than just Elliott waves. It's gonna not just Elliott waves. It's gonna be psychology. It's gonna be a trading plan, strategy, tracking statistics. It's gonna be the whole shebang. If I do it, I want to do it good. I do have it in the list that I have. So Jeroen, he's not here, he's probably in bed, but Jeroen is my employee. He's a great guy. And currently we are having a planning. So first, we want to make a PDF, which is it's coming. I don't yet want to say what it is. Some people may know, but I teased it a few times. But that's coming. And some other stuff is coming. And I do have in the planning as well, as status, just an idea, being a mastermind, personal coaching, and events. The only reason that is in my planning, mastermind, personal coaching, event, is because people ask in DMs and in Telegram and Discord and in live streams. So I just have it written. I don't have it written down as planned. It's just an idea. So I don't know, because it takes a lot of time. But I have it in my planner. So we'll see. So I do private teaching? Not at the moment. Maybe one day. But if I do it, I want to do it well. The emotional indicator is something we can't trade. Emotion. You got to keep your emotions in check. If I do personal coaching, it's live, right? It's live. Of course, I do want to give homework and exercises. Those can be videos, but of course you have meetings, like you talk to one another once or twice a week, and it's one-on-one, right? So that's what private is, of course. Yeah. Will the PDF be free? It was so clean. We have to. I don't yet know how to offer it. Maybe not, but I haven't actually thought about it because I first want to just finish it. So I don't know if it's going to be like an exchange thing, like, if you do this, you get this for free, or if it's just a few bucks. A PDF, it's never going to be expensive if it is, but I haven't actually thought about it. We're now focusing just on creating it. Yeah. You plan your Koenztrading hat. I like your way of thinking. I hope the merch shop is coming soon. Cheers, Smiley. Makes me think, everyone. I have two things to show you. Two things, and then I end it. My wife, she's gonna kick my ass. No, she's not. She supports me. The first thing I want to show you, Sarega, are you here or not? If you are here, Sarega, let me know, because that's the second thing I want to show. The first thing I want to show you guys is this comment. This is a comment from Wade Robertson. Wade, I have no idea if you're here or not, but this comment was very heartwarming, and I think it's one of the most honorable comments I have ever had, and that is because of what he writes in his comment. So Mr. Robertson here, let me just shortly read this, right? So besides the $2, because that's awesome, but I've been a Bob Practice Elliott Wave subscriber for 40 years, off and on. He actually missed the 87 crash calling for short-term higher prices. Lately, I have dropped their crypto service. 40 years. Lately, I have dropped their crypto service and started following your analysis. Your analysis is far superior in detail and offers both unbiased analysis for bulls and bears. Bob Proctor and his analysts are far too biased as perma bears on their S&P forecast, and their Bitcoin analysis is very elementary and brief, as well as bullishly biased without a fair bearish scenario. Elliott waves can be counted anyway. A fair assessment of both bulls and bears. It's just that this guy pops in a comment, has been following like Bob Practice, which is like the god of Elliott waves. Like he's the author of the book, right? The Bible of Elliott waves, as people like to call it. And it's so awesome, like to hear that he gave up the crypto service to follow the channel. How about that? When I read that, that was really cool. That was really cool. And second, please drop a like and a fire or whatever emote to this guy. I had no time yet to reply, but Serega cycled 167 kilometers, right, with his koenzhead. He is one of the 10 other people in the world that has a head. Oops, did I just... There we go. One of the 10 in the world that has a head. And what is happening? One second. I am messing up here. Cool. But what he did is very special. So he cycled 167 kilometers. I think with like a whole group of people. He wrote a message back in the day. It's already quite old. But let's see. I've written... Yeah, and then he just explains. So I will reply to this tomorrow. But incredible performance, and big congratulations to Serega, one of the people with the hat as well. So yeah, really cool. So with regards to the merch shop, it's planned, but I need a website first, and I have a meeting next week. I think Tuesday, which is literally in 2 days. To start the process of creating a website. And the website is important for many reasons. You know, it needs to be a central hub. So Discord will be the community hub, but the website will just really help with certain things connected to the channel. So in the upcoming months, we're in the background going to be working on a website, which is really cool. And then eventually we can have a merch store, you know, if people like it or not. But for the people that do, we can add it. I got some questions about the hat. I also have hoodies and t-shirts, but I don't have a store, so I can't actually tell people. So thank you, Samson United. Hey guys, it's been a great time. It was a pleasure to do an absolute full empty chart to full Bitcoin Elliott Wave analysis, and hopefully you have learned a thing or two. What we have done in the live stream is on a daily time frame, on a complete empty chart, started a new analysis in this range, covering it bit by bit, very educational, showing you every step in the process to come up with the high probability Elliott wave scenarios, how certain counts change based on new information. So we've done the daily, which took about 2 hours, and then on the 1 hour I fully explained what to look for as well and how probabilities change. So that being said, thanks for being here. Thanks for hanging out. I'm going to bed. It is 35 minutes past midnight, and I'm gonna see how the wifey is doing. So thanks everyone for being here. I appreciate you hanging out, and I'm gonna see you at the next one tomorrow morning. New update tomorrow afternoon. New live stream. See you then.